All right, this should be coming up in a second. Oh, fuck, I forgot to do ultra low latency again. Damn it, every time. Every time. Good morning if you're hearing this. If you're hearing the recording, you just hear me get upset. And the first couple words I say in here is, oh, fuck. That's great. Great way to start the Monday morning space. The stock market is almost back. I'm about to be opening this live spaces as well. Should be a good one. I just need to get all these tweets out and stuff and all the posts and all that good stuff and let you guys know that I am live. So let me do some of that stuff, open the spaces, and we're going to get started here. Plan is to be live for at least the next 4 or 5 hours or something like that. So it should be a good couple hours on these spaces. If you're hearing me right now, you're a real one and probably coming in here off of notifications and that bell button. So shout out to you. Appreciate you hanging by me for a second as I get everything going to get us started here. But this should be a great Monday morning in the stock market. I'm looking forward to it. Here we go. Start now. Spaces coming up. Anyone here? Do we have any concurrent viewers? 3. Damn, what's up? Good morning, team. Who's in here? Who's in here right now? KG, Bull and Bear. Let's get him in. Emperador. I want him in here. And that will be good for now. Yes, sir. What's up, Abzar? As you can see, I just got a message. I don't know what that is. Yeah, let me get all the text out and stuff. All right, we got the live stream going. We got the spaces up. Good morning to everybody. I hope you guys are ready for another great day, hopefully, in the stock market here. It should be an interesting one. We had a couple news stories from the morning and over the weekend, from Roaring Kitty returning and GME stock just randomly getting back up 30%, which I thought was funny. So 40% now. We'll see how that one unveils, to some Intel news, some Johnson & Johnson news, ARM Holdings, SoftBank, shout out to them, posting their first annual gain in 3 years. Vision Fund maybe making a turnaround, maybe not. Maybe it's just a whole AI story. Obviously, they own 90% of ARM Holdings, which has been doing fantastic. So I'm sure that has a big part to it. But this should be a really interesting and busy week in the stock market. I know we do have, let me just get this in front of me, my nice Catalyst watch. Today, some of the stuff that you should be watching for include... sorry about that. What's up, Kevin? Good morning, sir.
Morning, Evan. How are you doing?
I'm doing fantastic. Someone just walked into the room, so I had to mute everything for a second there, and I'm going to go figure out what that was. But yeah, no, it's been a good morning so far. It was 7:45, and I was up at 6. And then 7:45 comes around. I'm feeling terrible. 8:15 comes around, post shower, post coffee. I'm fantastic, ready to go. Rangers play tonight. Finishing the gentleman's sweep of the Canes. But quickly, I was looking at some of the stuff on the Catalyst watch that I'm watching today. There is that OpenAI event. They were originally expected to announce some search engine products. Those were some stories going around, and then Sam Altman put out a tweet saying, no GPT-5, no search engine, other stuff we have coming. So that'll be a very interesting one to watch. There is a JMP Live Sciences conference today, which includes companies like Elevation Oncology, Rally Bio, Terns Pharmaceutical, and Vigil Neurosciences. I won't lie to you, I don't think I've heard of any of those companies. And then we also have a Needham Technology, Media, and Consumer Conference, which will begin, including Clearfield, Adtran, Planet Labs, and Harmonic. Really don't know many of those ones. I do know Planet Labs because Stock Talk has talked about them in the past, and I may own a little, which I'm down a lot on. But that's besides the point. We have RBC Markets Global Healthcare Conference beginning today, and Loretta Mester speaking today. On the macro watch, we do have just Jefferson and Mester speaking together at 9 a.m. in about 12 minutes here. So should be an interesting day. We have PPI coming up tomorrow morning. So it should be a fun one. Kevin, how are you doing today, sir? What's on your radar?
I'm doing pretty good. I think today the market's kind of expecting not a lot of fireworks. I mean, from the Fed speakers themselves, they haven't had a huge impact when it comes to the market. In fact, I mean, we've had some, maybe, let's say some somewhat, shocking statements from some, and it's only moved the market 4 points. You're looking at the S&P 500. So I'm not looking for a lot of movement there. Today, once again, we don't have that much economic data, if any, on the calendar that's going to be market moving. So I think the market's really just going to try to prepare for PPI coming out tomorrow, and I think that's going to be, that's going to give us a really decent sign as to where we are at when it comes to the fight with inflation, especially when you're looking at the industrial producers. And we'll see if it does come in hot or if it comes in cold. A couple of things that I've just been looking at over the weekend here. One has been shipping rates. Shipping rates have been going up again. If you're looking at the Baltic Dry Index, there's a couple of other indexes out there, especially when you're looking at European routes that actually spiked pretty significantly. So I'd like to get some more insight as to why that is, if they are just seeing some residual going from the Red Sea situation, or if we are starting to see a little bit more tightening when it comes to ship supply that is out there. I think we also kind of saw a little bit of a bid after Israel went into Rafah, and kind of that back and forth. You actually saw that with Zim Integrated. Zim Integrated did pop pretty handedly over the last couple of trading sessions here. Now, they did have earnings, but once again, I think it's some of that commentary too, or just the fact that we might continue to see some shipping issues, which we kind of talked about it when it first happened, a couple of months ago. The fact that shippers would catch a little bit of a bid because it was a buy the rumor type of situation. The first quarter that they would report would be a little bit tough because their costs have gone up more than what we would see as far as their margins or being able to drive top line growth. That was the case for the first quarter that they reported, and now we are starting to see the tailwinds of them being able to adjust prices.
Morning, Paul.
Then move to the upside here, keeping my eye out on that. And then I'm keeping my eye out on the commodity space, especially when it comes to crude, right? We are seeing a little bit of a bounce in crude. But if I kind of go back and look at, some of the economic data that we've had, some of the fundamental data that we've had, as well as the trajectory to the downside that we've seen over the last couple of weeks here, I still think 80 to 85 is still an appropriate range for crude at this point in time. Gasoline demand did actually see a decent little acceleration last week, up around 1.8% according to Gas Buddy, which is good to see. There's a little bit of a fear that we're starting to see that level off here a little bit. And then also when you're looking at some of the China data, still kind of mixed, but we're still seeing like this reopening type of trade. Now, we did actually have some inflationary data that came out of China, I want to say on Friday, and it was better than the street's expectations, meaning hotter than the street's expectations. China wants to see inflation kind of go up. That's going to be a signal for demand. And if that's going to be the case, then that's going to be a tailwind for crude, but we also have to just be mindful of the price action and what we are seeing. And we are seeing a little bit of a downturn. If I look at a chart, I'm looking at 72 as that area of support. That would be the 200-week moving average. It's like $72.41, give or take. That would be an area of support that I would focus on. But I am a little bit concerned, right? So if you look at diesel / heating oil, I talk about this a lot. It's below its 200-week moving average. It continues to move to the downside. That is concerning for me. If you look at the longer time frames or longer time trends, that has actually indicated or signaled maybe a little bit of a slowing in the economy. Now, once again, diesel and transportation and the industrial side is only around 30% of our total economy, but it's a good gauge to say the least. And there's around an 88.5% correlation between diesel prices themselves and then what that could actually mean for crude oil prices. 88.35%. I put that just a simple linear regression study that I did yesterday. It's on my page if you guys want to follow it. So that's a little bit concerning, meaning the trajectory and the price action right now is showing that crude does want to break down, potentially hit that 200-week. But the fundamental data, once again, I still think is there. There's a lot of speculators that are shorting the crude market right now, and producers actually ramping up their long positions, which is something that that bifurcation does kind of happen. But the producers increasing long positions and not increasing short positions, meaning trying to lock in prices for existing inventory, does signal to me that they are preparing for potentially another surge in prices here over the next couple of weeks and or next month and a half or so. So I still think that that's an area that the market can focus on. Let me go back to just real quick. Energy stocks. From a chart standpoint, look like they do want to break down as well. I look at a lot of weekly charts. So for those that are, listening in, daily charts are cool. You can definitely get a trend out of that. Weekly charts
What's
give
up?
you a
What's up?
lot
Good
more
morning,
a
everybody.
lot more data. Monthly charts give you even
We're
more
talking with
data,
Kevin right
right?
now.
Identify key areas of support and resistance, and the weekly charts does show a little bit of a turnover when it comes to energy stocks, and rightfully so. If you look at the crack spreads, I posted this chart last night too. Crack spreads are now trading at around $25.13 or $25.18 or what have you. It's the lowest price that we've seen for crack spreads since February. So crack spreads meaning taking 3 barrels of oil, making 2 barrels of gasoline, and 1 barrel of diesel. It's just a simple spread, right? What are the refiners? And it's a gauge on the profitability of refining operations. And there's all different types of spreads out there. It's just a basic one that a lot of people follow. 3-2-1. So when somebody says 3-2-1 crack spread, that's what that means. Lowest since February, which is not good, right? So what I would say once again is it seems like energy stocks might be poised for a little bit of a pullback, even though we have seen some relative strength from them over the last 2 months. Just be mindful of that because of the profitability that we have for refiners. Utility stocks, oh man, let's just give a shout out to utility stocks. Like one, I haven't seen as many people talk about utility stocks. Everybody's talking about them now, right? And it was just good, right? I posted something about it about 3 weeks ago, 4 weeks ago about the potential to be able to pop, the technical levels that it was breaking out of, things of that nature, which is good. And they can continue to rise, right? Like if we do see yields going lower, that should actually synthetically increase the demand for utility stocks because their dividend yield will then start to be a little bit more comparable. But they have run a little bit too quick, too fast. So I think it would be more prudent to be able to specifically pick out utility names themselves than maybe utilizing the XLU. XLU looks like $71.50 to $72 would be that area of resistance for an immediate pullback. I don't think the trend's completely done. I'm just talking about immediate pullback to the downside. So I'm looking at utilities there. Once again, if you look at the weekly chart, definitely oversold. Looks like some of the indicators that it trades really, really well with, stochastics, MACD, things of that nature. Looks like they want to kind of roll over. So I'm looking at that. Two other things here real quick. Copper, it's showing late stage cycle behavior, meaning a fair amount of speculative flows. Managed money is all over that. I think it's actually third highest that I've seen as far as speculator longs in copper. Late cycle behavior. Producers are actually fading this move. We saw that last week in the commitment to traders report. Just be mindful of that, right? Price action is going to be king, but if we do start seeing volume starting to light up, I think that could be an area where we do see a pullback. Also, just mind you, for those that are paying attention or listening, I called out copper in October of last year, wrote a whole, paper of it, and people, have commented it. But one thing to just kind of note, we will see a fair amount of
I
supply
don't know,
hitting
RC.
the
I just
market starting in June.
I'll answer
Indonesia
that in a
is going
second.
to
We'll let Kevin
extend
finish.
out its export licenses for Freeport-McMoRan, and we will, which is called, their subsidiary is Freeport Indonesia, I believe, but Freeport-McMoRan actually owns it. So we will see a significant amount of supply hitting the market from a fundamental standpoint that should actually push prices down. And once again, I think that's exhibiting late cycle behavior. Gold, I think, once again, could see a little bit of a pullback. Silver as well. That's been a very popular trade. Speculators have completely commanded that move. And just be mindful, silver is not as scarce in this market like a gold or even like a copper right now, right? So silver is a nice inflationary hedge along with the industrial hedge, right? The reflation trade, along with, it's an inflationary hedge as well as the industrial type of hedge too, right? You have both exposure because silver is a metal that is utilized in 90 to 95% of all electronic products in one way, shape, or form. There is supply there. So I think silver does pull back, and it actually did pull back a little bit, I want to say last week. I'm looking for a pullback going to 25 to 24.50 and then trying to
All right, 9 a.m. news dump might be
trade
coming.
that way. And yeah, that's, I know that was a lot, but that's kind of what I'm keeping my eye out for this week. And then we have the CPI data. I'll have a note about that tomorrow, and we'll just go from there.
Yeah, we got PPI and CPI, and it should be an interesting week. We still have a couple earnings in the retail side of it. A Home Depot, a Walmart, etc. That was a really great intro there. It's about 9 a.m. Eastern here, and obviously, when the Mondays, there's a little bit more to talk about as we're kind of touching on 3 days from the past, from the weekend of news and stuff to catch on up on, and then 5 days to look forward to, including the day today. So it definitely makes sense that the Monday morning conversation tends to be a little bit longer. And I always love having Kevin on these spaces. If you're not already following Kevin, let me actually make him co-host. You should be, for sure. We got about 1 minute until this 9 a.m. news dump. And if a lot of the times, if it actually just came, if a company's going to report something, most of the time, a good amount of the time it comes out at 9 a.m. Eastern or 8 a.m. or something like that. So I'm watching this in front of me. There was a couple things that I saw. There was a China, they're going to be selling a bunch of debt later this week on Friday. So that maybe could be interesting. Let me look through this. And then I did see a post from Bloomberg talking about five commodity charts that you should be watching this week. And you're my commodities guy, so I'd love to get your opinions on those. I'm just reading through everything we just got, not really seeing anything major. Okay, so the Bloomberg put out an article this morning: 5 key charts to watch in global commodity markets this week. The 5 they chose were cotton, precious metals, oil, weather, and natural gas. We kind of just talked about oil and natural gas. So Kevin, cotton, precious metals, or weather? Any of those interesting for you that you're watching this week? I don't know what chart we're talking about. Weather. Global temperatures keep breaking records is the chart they're pointing out here. Interesting. But precious metals and cotton. I'm sure that precious metals one is a conversation focused around China. Just given how kind of they've been able to, corner that market, at least different parts of it. But yeah, I find it interesting. I wonder if either of those are stuff you're watching. You kind of already talked about most of them. That's just funny. But yeah.
Just to clarify, so we talked about crude. Natural gas is going to be a little bit different. So we're seeing a squeeze to the upside, or we were seeing a squeeze to the upside on natural gas. Several different things. It was the weather front. We had better than expected weather. I think it's 11 days less of cooling days. That's a weird thing to say, right? Meaning that they believe that the summer months are going to have 11 additional days of hotter months rather than cooler, or hotter days than cooler days, right? And that would increase the demand for electricity, which is natural gas is going to be one of the major inputs for that. So we had that kind of kick it off. We also had a situation where Russia continues to attack the Ukrainian energy infrastructure and natural gas infrastructure lines. And so Ukraine is now looking to actually double their imports when it comes to natural gas. That was another physical demand item that was coming out there as well. We have lower capex spend from a lot of natural gas companies or those that do and processing. So that should actually lower supply in the market. And we continue to see gas rigs going offline. Which is another situation that's occurring. And then I will call this a massive short squeeze because like the amount of short interest that we have seen on natural gas has been absolutely ridiculous to say the least. And so those are all 5 things that are kind of happening with the natural gas space. But just be mindful, right? On the other end of that, we are in injection season, meaning that we're going to refill our inventories of natural gas, which are already at record levels. I think we're like 35% above our 5-year average when it comes to natural gas reserves. And if you're looking at the European Union, they're above their 1-year and 5-year averages as well. So it's a lot of abundance that's there in the market. I kind of believe we're also getting this narrative too that natural gas and electricity demand is going to continue to go up because of AI and data centers, which is another reason why we saw utilities catch a little bit of a bid. That will be a thing, but what I would just be mindful of for those that are trying to do this play for the long term is focus on where these data centers are being built, right? And then focus on the natural gas, or focus on the utility companies that are actually servicing those locations. So if somebody's building a data center out in Alaska, I'm just making something an example. Is NextEra Energy going to be the one that's going to supply their power? No, right? Like, that's just not how that works. So you want to be able to kind of pick and choose. On the natural gas front, I still believe that fundamentals, as far as the amount of supply that we have in house and in the market, trumps what we see as far as the price action here, and we are hitting a pretty significant area or a gap for resistance. Can it remain here? Maybe. Could it push higher? Potentially, but I would say the overall fundamentals are showing depressed prices for natural gas right now. One thing that is actually a benefit, though, you're seeing this move in natural gas across the curve. So different expirations for the futures, which is actually good. You're not seeing a front month spike rather than a front month spike, and then all the other contracts are not getting any love. We're seeing contracts getting love across the board over the next 6 months. So we have that cotton. Look, cotton's been very depressed. There's been a lot of supply that's been put onto the market. It is a thing that we actually do grow here in the United States, right? But it's not like a huge agricultural product. But we've just had so many
Good morning,
bearish
Ali.
pressures on cotton.
Thank you for joining us. We're listening
and
to Kevin
a lot of
talk about
short
some commodities.
selling that's happening in cotton as well. So the thought process there is that we will see a resurgence of consumer demand out of the Asia markets, and that would actually draw on supply here in the United States. But that remains to be seen.
Good morning, Cam. Appreciate you joining me on here.
Support that for the cotton play right now. That's just me though.
Kevin.
And then yeah.
Oh, continue. Sorry, I thought you were done.
Yeah, no. And then the weather side. I mean, there are weather futures, right? But they're not a retail product, so I would kind of stay away from that. But if you wanted to have a weather play, you would look at the grains for that. So the grains would be that direct weather play. At least here in the United States, you would look at soybeans, you look at corn, and you can also look at wheat. Even though wheat has a little bit more of a different dynamic that's going on in that market.
Kevin, we just got a story out around NVIDIA. The Information put out an article saying, the title of it is Chinese Regulators Tell Local Firms to Buy Fewer NVIDIA Chips. The kind of meat of it is officials with government agencies in recent months, so this isn't like a thing that happened yesterday, have told tech firms including ByteDance, Tencent, Alibaba, and Baidu to cut back on their purchases of foreign-made AI chips in favor of buying more domestically made chips. This is a story from The Information, who they kind of play in the leaking world. They don't get everything right. I personally do think they are a solid news agency that's at least worth watching. So we don't know if this is a full fact, but this isn't some random company that never breaks anything. NVIDIA was at about like 907 before this came out, and it's right around 903 right now. It got down into the 800s, high 800s for a little bit. We know NVIDIA is a very expensive company. And actually one thing I heard, I really did kind of take to heart, like when we're talking about a stock that's $900, I kind of sometimes, if from my head, like to say it's a $90 stock, just whatever. So if from 900 to 800 is the same as going from 90 to 80, from 900 to 890 is going from 90 to 89. That's kind of the way that I try and wrap my head around these moves at the scale of a $900 company. So this really isn't, we're going from 91 down to 89 maybe. But I don't know if you saw this one. That was an interesting move. This last 5-minute candle here, NVIDIA is trying to bring it back a little bit. We also did have Google moving lower off of news from Friday that said that Apple is closing in on a deal with OpenAI to use their software. Apple does have an event coming up soonish. I think it's June 10th is when WWDC is, and they're expected to announce a lot of new AI features. So that's definitely something I'm keeping an eye on. It's interesting to see Google about to opening the day down 2.5% off of that one. Intriguing day there. There was a couple other headlines from the morning, Kevin. I don't know if you were following or watching some of the stuff. There was 2 companies, Microsoft and AWS, Amazon Web Services. They're planning to both invest some money into France. Microsoft was $4.3 billion. Amazon Web Services was $1.3 billion. Different data centers and stuff like that. We also had Intel, a story that they are talking with Apollo Global Management to get $11 billion to build a chip plant in Ireland. Interesting there. And then, Kevin, I actually want to get your thoughts on this story. I thought this one was a little weird. J&J, they announced their plans to fully sell out of Kenvue. So if you guys don't know, Kenvue is a company that J&J spun out from itself. So it was a part of J&J for I don't know how long, but a while. And they spun it out a year ago. And they announced plans today to fully sell out of the company. They're going to exchange their 182 million shares for debt that they have with JP Morgan and Goldman and stuff like that. So J&J trying to bring down its debt load. And Kennedy will not receive any proceeds from the secondary offering. Is this something you see a lot, Kevin? A company spinning out one of their divisions and then completely selling off of it a year later? This one felt a little bit weird to me.
Yeah, I believe that this was actually a part of their strategy
Oh,
all
okay.
along here. Yeah, I don't think this is actually breaking news. I mean, this was the speculation that was going to, like, we were speculating this was going to happen over time, and I think they actually did note that they would reduce their exposure. So I'm not too.
Kevin, were they
Yeah, I'm
saying
not too
reduce
sure.
their exposure, or were they saying fully sell out?
Well, I would say that's probably the language that they would, the appropriate language that they would use,
Gotcha.
right? Like you wouldn't, really wouldn't, you wouldn't want to sell, spin off a company and be like, we're gonna dump all
We're
these
gone in a
shares,
year,
like,
guys. Take it,
yeah.
take it. This
So
is the best company ever, but we're selling in a year fully.
exactly, yeah, you don't
Fair.
want to do that, and that wouldn't be good for shareholders for either company there. So I think that this was actually something that was already kind of in the works, and honestly, like if you're looking at the price action, Kenvue's not doing anything
Yeah.
right now. So I don't think this is like a huge. It's not a huge deal in my opinion. I think it's just something that's it's the thing, right? I mean, like they're trying to J&J is one of these companies, and we're seeing a lot, like what 3M is like the same way, right? A lot of these companies in the 90s, conglomerates were like the big thing. You get everything, even if it was not related to your business, you wanted to have everything in-house, right? You want to be that one-stop shop when it came to a company, and shareholders paid a premium for that in the 90s. But now we're starting to see that a lot of these, businesses, they don't provide any synergistic value to the core of the company. And so you're seeing these spinoffs, and they're trying to get back to what they do, right? What they know, what they're known for. And then J&J also has like some issues, right, when it comes to the powder settlement and all that stuff. And they try to do a whole bunch of funky things and try to skirt trying to pay people, which is kind of shady, but whatever. So yeah, I think J&J is just trying to get back to the basics. I think 3M's probably trying to do the same thing. We've seen other companies trying to do this right now. It's all about being lean and being just focused on your core business, and that's what's getting value these days. Instead of 30 years ago, it was, buy whatever. Like I could care less if you were a medical company, get some exposure to tech or whatever. Like that's just how it was back in the day. It's just not like that anymore. Who else was the Kellogg, right? Kellogg was the same way. And we see that they're doing a bunch of spinoffs and have done spinoffs too. So I wouldn't
And
take too much away from
the spin-offs
Yeah,
have worked
Kevin.
well for GE. But what's up, George?
Oh, I was gonna say I think he was touching on some interesting things in terms of just like I think the flow of how marketing works and branding works and I even think kind of just like some late stage capitalism stuff, because I think what you touched on with the powder is one of the issues where I think back when these things were conglomerating, what you had was the more money scale you could put behind things like
I appreciate all of you
marketing or
guys for being in
branding,
here,
the
by the
more
way.
lift
We're
you
we're
got. It's
killing it
like
this morning.
as these
Ollie,
companies are maturing, and
Paul,
it's hard to be as
RC,
big as J&J. I mean,
Abuzar,
I'm not saying
Cam,
this is a good thing at
him
all, but
FPV.
it's hard to
Thank
be
you guys for
as
saying
big as
something in the
J&J
chat so
with all the
far.
corners people are
And shout out
cutting
to the
and not
17 people
have
we
like
got
one
concurrent
clear
listening in here,
story
hanging out
that's
right
really
now.
going to piss
Pretty
people
solid.
off.
We started
Like
out with
it's really
0,
to
and
the
then we were
benefit of
kind of building up to like
conglomeration when you
5,
start
10
having
last week,
people
15,
who
and now we're
experience
chilling
that
here in the
story
morning with
avoid
17.
things.
So
And then I
if you
think the
guys
other
are
thing that's
new in here,
really
hit that
changed
subscribe button,
is
hit
the
that bell
way
button there so you
marketing
get a
is
notification
targeted
whenever I go
now. The
live.
way it's like,
And yeah,
it's
we're gonna
not
keep up
kind
with
of
this Monday
broad
morning talk. We should
marketing
start the live
efforts
trading in
that,
about 20 minutes when the
keep
market
kind of,
opens.
the
I'm
brand
gonna go back and
recognition,
listen to
especially if
George.
there's issues with the brand. You have to know your market so well so the conglomeration, doesn't work as
Shout out
well.
to
I
whoever who
think,
just liked the
we're
stream there.
transitioning. I think as things get more automated, I think we might see things, form into these big conglomerates again. But for now, it's kind of the Wild West in terms of how these things are forming. And the other thing I wanted to mention, Evan, was on the Google front. They actually went up about 5% the day that they announced, or that Apple announced that they were seriously considering using Gemini. But it's looking like it's a little less today, so it's kind of funny that the bull bear side of the story, especially considering I think the other main thing that I'm hearing a lot more of that I've had my eye on, I'm in a wait and see approach around it, because you heard it with Bing, that Bing was going to start taking Google down when GPT was integrated, and that didn't really happen. But I don't know if it's OpenAI or who's making this marketing push, but I've heard a lot more retail investors talking about how like the next batch of search is going to really give Google a run for its money. And who knows if that's going to happen, but I will say the chatter on that is getting louder.
So I really think this whole Apple, if they're going to partner with Google or Microsoft, OpenAI, it should be an interesting one to watch. They obviously have a decent relationship, I'm sure, with both companies, with Google paying them $20 billion a year to be the default search engine. And I would imagine these conversations on the back end are really going Apple using its leverage with more than a billion installed devices. It might be even 2 billion at this point. I'll have to look into that. Because I know they talk about this a lot. Installed devices. Apple. But basically, this is, to me, in my opinion, would be just a conversation around who is willing to kind of give Apple the most. Apple probably has a lot of leverage here, and they're trying to get the best deal possible. So I wouldn't be surprised if they have 2.2 billion active devices. So I wouldn't be surprised if the story of them getting, I have no insights here, but I wouldn't be surprised if the story of them getting close to a deal with OpenAI was a leverage tool in their discussion with Google to be like, hey, this is the time, come down another 1%, 2% on whatever we're offering, or offer us a little bit more. And I would be curious to see, I wouldn't be surprised if that's what this really was. But it definitely seems like they're trying to use both of these. And there was a tweet from Mark Gurman, who is Bloomberg's Apple insider, over the weekend. He was kind of talking about what Apple's AI plan is. Let me get that in front of me. This is the Apple AI strategy. I'm just reading Mark's tweet. A, on-device LLM in-house. B, cloud-powered LLM in-house. C, chatbot. OpenAI for sure. Google maybe. So I don't know if a deal with OpenAI gets signed, if that's even exclusive as well. So that's definitely one that I'm keeping an eye on. But that is a very fair point that Google got some of an upwards move off of some announcements here, and it hasn't even pulled back all of that move. So I think given the uncertainty around what could be happening here, that could make sense. And I feel like one day this is just going to end up with Apple using both of them. Maybe. All right. We did also another big story this morning. It's an interesting one, and we haven't touched on. Kevin, are the meme stocks back? We had Roaring Kitty come on Twitter yesterday and just put some emoji. Obviously, GameStop had a good week last week. It's still down if you pull out and scale out, but that's I digress. Stocks up of like 30-40% this morning. Kevin, is the meme mania back, and what do you think that says about the stock market where we're currently at, if anything at all?
I mean, it might be. And it would. The post, it was just like a meme, right? Like it wasn't anything that was like super serious, but people are gravitating to it, and so we are seeing a squeeze to the upside.
Kevin,
here. I don't know.
It has 10.5. Yeah, I hear you. It has 10.5 million views. That post. That's kind of crazy.
Yeah. No, I was. I was looking at it last night, and look, I mean, people want to have a story, and if the market can get hyped up about something, that might be something that we may see. Now, if you're looking at short interest, I mean, it's 24% of the shares are shorted right now. So I mean, it's a high short interest on a relative basis, right? 2 days to cover on that, and then when you're looking at dark pools or that off exchange type of volume, the big institutions, 60% of that is being shorted. So yeah, this is definitely another short squeeze that's in the making. Let's see how long this one lasts, right? And I already am seeing people calling for $100 GME, right? And then AMC is also popping this morning as well. Yeah, look, once again, we kind of talked about it last week. Low volume market. People are trying to search for alpha in one way, shape, or form. Where's the next leg of this move going to happen? And this is a lever that we've seen being pulled in the past. And we just have to see. How do I say this? Look, GameStop, AMC, all of these companies, right? I'm not hating on them. Like, they do what they got to do. The fundamental story, though, for a lot of these companies has not really turned around, right? And I think that's been an area where if you wanted to get a short, if you wanted to like squeeze the shorts, right, and defeat the man, if you will, right, then you need to have the stock price be able to do it, and then you also need to be able to try to have some fundamental story or thesis in order to kind of carry you through and hold prices. And we just haven't seen that yet from a fundamental case. So yeah, the stocks can move to the upside here, but until I see something that's like structurally changing for these businesses, I still would be fairly cautious about it. And in fact, if you're looking at AMC, I know we're talking about GME, but if you're looking at AMC, the slate this summer when it comes to movies is nothing that's going to like really shock the street, right? Like there's already analysts coming out and saying like, there's not that much that's going to be out there. But yeah, I mean, it's always fun to catch a short squeeze, especially if you're not on the wrong side of that trade.
That last point there is kind of my question. There are plenty of terrible companies out there that don't have a cult fan base behind it who want to defeat the man. Why is there 30% short interest in something like GME that it feels like they're just asking to get beat up again and again and again? Like, I agree with you, GME, there's not really been the turnaround in the company itself or AMC. They're probably in areas of structural struggle for a couple of years unless they can turn it around. This is still a name that I would very not have any interest in shorting, given what we've seen over the last couple of years. And I almost think that someone who's jumping into the short at 2 days to cover at 30% short interest kind of deserves what might be coming in this squeeze. And I don't think it's going to last. But that also, if you're short, you might not be able to survive it lasting, if that makes sense. So I find it weird and questioning why anyone would even want to go short this when there's so many other terrible companies you could do without that cult following.
Yeah,
it's the valuations, right? Like, I mean, like if the company's not really, at some point in time, stock will trade towards the fundamentals of the company. And if you're not showing any type of positive free cash flow and you're just burning cash, at some point in time, you're going to need to be able to have access to capital in order to continue to operate, or you're going to see it suffering your stock. So there's a lot of fundamental traders, institutional traders that are out there that look straight up at the free cash flow. And it's like, hey, if you're not making money, then at some point in time, you're going to go under. So those companies, those institutions, they short the stock. Like that is a way to be able to play it. Now, you're right. There's certain times like Carvana is like a really good example, right? Like, people were shorting Carvana when it had like 35, 40% short interest. Do you start a short there? No. But if I had a short position on and I was able to maintain that position all the way down, yeah, you might be still holding on to that particular short. So I think it's just trying to pinpoint it. But the shorts are not wrong. Let me just say this real quick. I'm going to get a lot of hate for this. If you fundamentally cannot survive as a company, right, dollars and cents, being able to be profitable and be able to manage your company, at some point in time, you need more access to capital, which we've seen these capital raises from GME and the structure that they've been trying to put out there. And honestly, guys, they haven't worked. They have not worked. I mean, let me say this. It hasn't worked from a standpoint of them being able to utilize that capital to put to work to be able to become profitable in a manner that the street respects. And so at the end of the day, you're still going to have people short it, even though you're going to have these short squeezes or these pops to the upside. One thing to also kind of note, too, if you're an institution, there's ways to structure your short as well to be able to cover yourself to the upside. And so I think there's a misconception that when people just go short, like this whole notion of like naked shorting, it's like the dumbest thing I've ever heard. These institutions are smart. Right? They've already gotten burned once. You caught them off sides, 2 years ago. They're not going to be off sides that much anymore. So they might short the stock, and then they might go long some calls on the hedge side, right? Out of the money calls. They do see a pop. They get the gamma squeeze that happens with that. It offsets the losses when it comes to the shorts. And then they can maintain their short positions because of that gamification of that option position. So there's ways to kind of get around these type of movements here. And the last thing I will say, Evan, you want to be the first to buy and then the first to sell. That's the whole point, right? That's the whole point. So yeah, this guy or whoever this dude is, right? I know who he is, but I'm just saying he could tweet out something like this and get a whole bunch of people in. And yes, there are people buying at this point in time. But once again, do you want to be the last one to be able to sell out of these positions, knowing the fundamental thesis that's kind of happening right now? Let's say GME says, okay, we're going to do another secondary offering, right, in the market, diluting the shareholders, as a whole thing about that, right? Then is that going to be fundamentally sound for this company? Is somebody going to double down after having a new offering in the market? I don't think so. But we have these type of situations, and it's cool. I don't play this name. I could care less about GMA. I think it's actually kind of funny that people do this. But I would say just be mindful if you are trading this name. Be mindful of your risk parameters that are out there, because once again, if it's not a structurally sound company, or you don't hear anything in a conference call, which a lot of these companies don't even have conference calls anymore. But if you don't hear anything from these leaders that really give you a sense that the business is turning around, then just mind your investment. And you will have pops like this every once in a while, but just mind your investment. I also saw some people screenshotting their positions, and they were like, I'm still holding. And they had shares at $45, $50, $60, and they're still underwater on this, right? This is their last gasp, their last hope on being able to sell out into strength. And so that's what I'm saying. I'm not negative against GME. I'm not negative against AMC. I think it's hilarious that this stuff happens, but also understand the structural standpoint of it. Carvana, completely different. Carvana, the company's still not like the greatest company in the world, but Carvana got a huge lift when it came to their debt and their ability to be able to restructure that debt, which is why you're seeing these like outsized, crazy comps when it comes to their profitability and their EBITDA metrics. That's a structurally different company than what we saw a year ago or 2 years ago, right? You can make a case for Carvana in the near term that maybe something is popping. There's industry data that's out there that's saying, used car sales in some respects, especially when you're looking at SUVs and pickup trucks, are actually still fairly strong on a relative basis. You can make that case. Different company, debt load is completely different compared to some of these other companies that already, I believe GME actually has no debt, if I'm not mistaken. I think they have one thing that's out there, and I don't even think that's considered to be debt. But once again, are you driving top line? No, not really. So that's how I kind of look at it.
I appreciate those thoughts there. By the way, we got the stock market open in about 5 minutes, and we'll shift into some live trading when we get to that point. I do see we got a couple hands up. George, and we'll go to Stock Sniper. George, you got anything you want to end the conversation around GME?
Yeah, I have a very interesting perspective on this, and Kevin, I don't know how much he's researched it, but he got a few of the things right in terms of what he was speculating on, in terms of the sources. My history, I actually made the social sentiment rating for my company after GME went up, and I was in AMC early. Actually, I'm starting to use my personal Twitter account more. If anyone looks what's at the top, I actually called the squeeze a few days before it actually happened, way back in the day. And the interesting thing about this is these meme stocks has become actually the antithesis of what people want as the revolution on Wall Street. Because the way that I see this, it's become very hard for a lot of institutions to predict the market. It's so choppy. And my read on this, and very much this is backed by a lot of the people I've talked to on this that do this trade. And then when I do this trade, I mean the meme stock trade on the institutional level. It's that this is one of the easier trades because the hardest thing to do is to get a bunch of people, retail investors, to do exactly what you want. And when I was in the AMC trade, there
Good morning,
were
Rupesh.
straight up false identity people. I became a moderator at AMC Holders, which was a 30K group.
We're just listening to this, talking some GME, AMC, starting out the market pretty strong. Google is about to open the day up, down to about 2-3%. Should be interesting. We had a couple reiterations and stuff, but big story of the morning is probably going to be we're back in the meme craze. GME going crazy off of just a tweet from Roaring Kitty. Just kind of funny, actually. Casual 10.7 million views.
And the playbook on this is when it becomes interesting, the largest institutions, them, start to stock up on lending out shares, then all of a sudden they'll pull them. And that playbook is known pretty well at this point. And a lot of the times, Kevin said, a lot of the shorters are buying calls as they short it. That's how this gets up. They're setting up the springboard. And they actually make more money on the way down than the way up. They have to short it pretty heavily to get the interest sometimes, to get it attractive as a meme stock. Then they're buying up their calls.
Ooh, Google with another big push down.
Some money there, but they make even more money on the game of musical chairs of when it stops as they're loading up on puts for it to go.
GME about to open the day up 50%.
And basically what happens there is all computerized, and that's why a lot of people try to get out, and even if they have stops, it gets out at a bad position, because what's the best at figuring out exactly when it's over? Yeah, there's conversations going on the side. This is a bit of a grift that people have against retail investors now, which is why it's pretty much the last thing any retail investor should do if they actually care about sticking it to institutions, because everything I've researched on it now is this is actually a profit center for institutions. It's easy money.
And when you have I'm sorry, let me clarify too. George, you're absolutely right, and I appreciate that too. what's happening. So what we are going to see this morning in about 2 minutes is you're going to see premiums on both the call side and the put side just spike to the upside, right? So what's going to happen is market makers, once again, they're not going to go offsides again. They're not going to try to be offsides again. So they're going to juice up those premiums as much as they possibly can in order to be able to have the theta to be able to run off and be able to be profitable with this. The gamma move to the upside for those institutions that are shorting the position. Let's say you're shorting 100,000 shares of GME, right? And let's say that you bought the $25 calls at the time that those things were probably worth absolutely zero. You're going to have this gamma move to the upside. You're going to have market makers juice the premiums. You're probably going to have more of an outsized move on the call side than you are, and any losses that you're going to have on the short side. That just happens when you go from really low vol, literally no one caring about it, to everybody starting to care about it. And that's how they're able to offset some of their losses. Also, just kind of keep in mind too, those market makers, now institutions can put them on the same side as the market makers, meaning market makers are going to be nervous about the gamma squeeze to the upside. What are they going to try to do? They're going to try to short shares as much as possible, get away from that strike, the popular strikes that are out there to push the market down. That's a market maker's job. And they do that across the board on all different companies and all different indexes and things of that nature too. So we have to just kind of keep that in mind. But for right now, right, we are seeing that squeeze to the upside. But it's like a fool me once, shame on you, fool me twice, shame on me type of situation. I think that's probably what we will end up seeing. When you want to... The whole thing about the DRS thing with the shares too, right? Like that's a huge thing that people like care about. And I'm not going to say it's everybody. I think people that understand the market know the differences. It's not that like people are just picking on GME and it's like this whole thing that it's like a cabal that's like trying to destroy this company. Right? That's not really the case. It's an easy target because
Yeah,
of the
Rupesh, I
fact that the
got you. I'll
fundamentals,
ask
and
at
you have
some
to
point
think
some of the
about it. At
speakers
some
too.
point, an
We'll
institutional
talk some
trader or
CrowdStrike.
an institution won't continue to throw money into a company that's not showing any type of signs of turnaround. And that's the institution's base case for shorting the stock. I'm not saying it's the right thing to do. I'm just saying that's the base case why you have these very long drags to the downside for a lot of these names until you see these like intermediate spikes. So I haven't heard anything from the company that really would change the thesis outside of this meme that we had yesterday or whatever that was posted, right? And so I'm not hating on it. I just want people to be very, very cautious. We've seen this story happen before. Maybe this is going to be a different story, but just be very mindful, utilize your risk parameters because I've seen horror stories. I've seen horror stories from people that have put actual like working capital to work and try to leverage it in order to try to catch these moves. And unfortunately, they seem like they don't stick after a while. It'll be a headliner for maybe 2 weeks. We'll talk about it, and then it'll fall off the map, and then goes back to business as usual. Usually, unless Jimmy comes out with something just revolutionary.
All right. Quickly, the market is now open, and the way these live trading spaces work, we kind of have these talks going on, and then whenever these traders have something that they're watching or taking, they kind of just cut in. So if anyone jumps in over people, first of all, for the people jumping in, please feel free to do that. We encourage it. We know these trades are very timely, so we would love to hear them. And then if someone interrupts you, there's nothing personal. The trades are very timely. I do want to give a major shout out to Kevin. I appreciate him for co-hosting that morning segment with me. He's always fantastic. You should be following him. And all the traders we have up here are also fantastic too. So when someone says something you enjoy or smart or something that you learn from or is informative, give their page a follow. These spaces are a really great way to find new people who know what they're talking about, and I appreciate them. What's up?
Sorry to interrupt, Evan. I actually just bought a piece of Alcoa. It's a aluminum name, and it had been something that had been basing out for the last few weeks. So I just took a piece over yesterday's high. The other name that really interests me is Pinduoduo. It's a name that I didn't buy perfectly, but I also bought a few weeks ago on the day it broke out on 5.2, and it is beginning to shape up really nicely here on the daily. So Alcoa and PDD are two that Alcoa is one I bought, PDD is one I own, and one that I might consider adding to today.
Gotcha. And good start there with the interruptions. That definitely meant to come in for my direction as well. So if I'm saying something, it's 99% of the time I could wait 5 minutes to say it. So appreciate those. Alcoa is on watch. I see actually what you're seeing here in Pinduoduo as well. PDD. Stock Sniper.
PDD and AA. Yes, sir.
Stock Sniper, you got your hand up?
Yeah, good morning.
Good morning.
I know the market just opened, so I'll be pretty quick. I just wanted to touch on a few things and comment on a couple things that Kevin said. But just one thing that Kevin said that was a great point is, especially with financial Twitter and Instagram, Reddit, etc., we have a huge fear of missing out culture, especially on these meme stocks. And based on what we previously saw, I'm sure that we're going to see lots of people throwing way too much money into some of these meme stocks. But yes, I've also seen absolute nightmares as well. People trading some of these names
This is
extremely
disgusting.
leveraged. I think Carvana's a little
Ollie,
bit
shut
different
up.
of the story, just like he was saying. I personally absolutely hate this company from the get-go. I think selling cars inside of a vending machine is an absolute horrible idea. I don't even want to really get too much into depth on that. It's kind of similar to seeing Peloton valued at a $50 billion company. Didn't really like that one as well. But one thing I just wanted to touch on is
Sorry to interrupt. I just want to say I got into Reddit calls right at the open $70 strike for June 24th.
Yeah, I was going to say, I'm seeing a lot of Reddit option flow coming in. We have the major indexes taking a strong dip here, though. But the memes are disconnected from that, so.
Yeah, I'm watching BYND, the Beyond Meat, looking at the $8.50 calls here.
I actually got something about Beyond coming up. So I was looking at short interest on a lot of these names this morning and last night, considering we saw this Roaring Kitty tweet that everybody's talking about.
SCCO, it's a copper name. Shares.
But I'm going to go ahead
I got some eyes on FCX, too. The metals seem to be coming back, generally speaking.
Sorry, Sniper. Yeah, we'll I guess it's the wrong time.
That's time sensitive. I get it. We're looking at AMC. We see 55 million short shares at 18%. GameStop, we're seeing 64 million sitting at 24% short interest. And BYND, Beyond Meat, we're seeing 25.3 million shares short, and that is sitting at 40.97% short interest. That is a massive one. I want to give a shout out to Starboy. I was on the Twitter Spaces with him earlier today, and he's the one who actually put my eyes on that. But
GME halted to the upside.
Yeah, GME just halted, yeah.
There you go.
Popping.
Wow. We knew that was coming. Taking a brief look at SPY, which
is 30% trim here on BYND.
I'm in AMC calls.
I'm watching 522.73 on SPY, which is actually our pre-market high. I think things could get interesting up there, and I'm seeing a little bit of resistance over there as well. But that's all I got for now.
Appreciate you, Sniper. Fighting the good fight there, trying to get that out there. It was still informative, and like we said, the point of these spaces is to hear kind of the live stuff we got going on. So both sides, good start to the day here. Should be an interesting one. GME was pulling back a little bit there in the first candle, but obviously the second one pumping up. Almost at $27. I'm interested in watching this one. And Beyond Meat, I see this move. I see why you're doing it, and it makes sense given that short interest we're talking about there. Why you see Roaring Kitty back, and that's where your attention goes first. Fair enough.
Hey, next to Alcoa, you also have
$25 strikes for June 21st expiration. I think genomic names get bid right now.
What was that ticker?
Beam.
Beam. Gotcha. All right.
Yeah.
And Real Simple, Ariel.
Yep. I was also saying next to Alcoa, a little bit cheaper of a name for some people if that's their thing. Century Aluminum, about half the price. Another nice looking name. I'm not exactly sure what's going on with the metals complex here recently, but obviously gold broke out of a super monthly base, so could just be momentum followers. But yeah, Alcoa, CENX,
25% AMC calls.
Definitely one to keep an eye on.
KC, you full on in the meme stock mania? At least for the traders?
Yeah, whenever these opportunities present themselves, I just capitalize on it. I personally don't care too much about the company. If there's people out there that all form together and, jump in on these kind of things and the stock goes up, cool, I'm going to play it. That's how I bought the house I'm sitting in right now, so I'll do it again round two if it happens.
Yeah, well, if he was talking, he actually made a good little yoke at the end, so you missed a good one.
Should I drop down?
Nah, we'll see. Casey's not that important. No, I'm kidding.
He is to me.
Casey, sushi for lunch today? It feels like it's early on, but that was just confirmed.
Yeah. My ATM bot went short SPY at the open, and it just hit target here. So far, it's been a pretty decent morning.
All right, interesting morning.
Look at Celsius.
CELH. It moving with the meme stock names, Wolf?
Back over 85.
Wolf, is Celsius a meme stock?
Celsius is the king of meme stocks because
Really?
it's an actual stock.
Hey, are any of
Tesla pushing. Yeah, go for it.
Sorry to cut you off there. Are any of you guys think or swim traders?
Yeah, I use it.
Is it working for you today?
Yeah, but I already had transitioned a few months ago, or like 2 or 3 months ago. But yeah, it's fine.
I see.
Yo, defense is still looking pretty good here. Looking at Raytheon still holding these calls.
Yeah, I'm not
Similar-
surprised. There was a lot of news over the weekend from both fronts, from Israel, Gaza, around Rafah, and other stuff there. And I did see a lot of stuff around Russia and Ukraine with attacking, as Kevin was saying, with attacking different energy infrastructure. I don't know how confirmed it was. I saw some tweets around stuff in the Kharkiv and Belgorod region, which isn't super active over the last little bit since Ukraine retook it. So from what I was seeing, escalations over the weekend in both of those conflicts, which would make sense for why the defense names are up. XAR is one that an ETF that I own that plays that. Thanks to Jaguar, shout out.
Sellers still coming in hitting tech.
Yeah, I still have a few SPY puts.
Yeah, it appears to be Microsoft, Meta, obviously the Google gap down, and Amazon as well as red on the day. So, and then the meme stock Tesla is pushing higher. So,
Oh god.
Tesla's running a bit right now, so I'm watching the flow for that.
and then you've even got
Frank,
names
did you
like
get a sale out
Supermicro.
there?
You've even got names like
No, I didn't.
Supermicro breaking last week's range.
It just seems silly with all this meme stuff going on, right?
Good morning, Frank.
This is crazy.
We're
Hey, good morning.
running
Ooh, SMCI is dumping.
ARKK up big.
Yeah, Nvidia just went green to red.
Ooh, what are they doing over there in China? Look at Baba.
Yeah, Baba.
Baba popping. Baba 10%.
I think they report today or tomorrow, I believe.
Yeah, and
Tomorrow.
with
What are they
Baba,
gonna report today?
Duo as well.
Yeah, the
They
whole
can't
China
stop buying.
sector. JD is up as well. Neo.
I'm taking off some more SPY puts here. I'm taking off some more AMC calls here.
Good
and
call.
one of your leaders in the China space is TME, Tencent Music.
30% AMC.
Good call from Kevin. They report tomorrow morning, Alibaba.
Let's go, Raytheon.
Well, no real earnings you guys are going to care about the afternoon today. STNE, I believe that's Stone Co. And I don't really even recognize a lot of these other ones. INO, I've seen that one. Kathy would name probably. And then Home Depot, Alibaba, Petrobras, Sony, Sea Limited report earnings tomorrow morning. So before the market, just keep that in mind if you're trading any of those names. The options are going to be juiced.
Yo, Evan, you could update the title to the space.
I mean, you could have.
I could have, but you know.
I literally just took out almost.
I know you like doing
Holy
that.
shit, GameStop's up 70% right now.
Actually,
It is. Let's
I've
go.
not been looking at it like that.
guys.
Fucking rip it.
Whoa. Let's
Up
squeeze.
And it just
40% on my
halted
Reddit
again,
calls.
too.
Let's squeeze is here. It's so funny because we
GME
didn't
just
even.
halted once more.
It just halted again.
AMC.
Dude, I love
day,
this. I literally
40%.
went to an O's game on Friday and I wore my I like the stock hat. So it's perfect timing.
So is it your fault
my
it's moving? Are you the reason? Did Roaring Kitty see you out there and was like, I need to come back?
They put me up on the billboard. Keith Gill saw me. Yeah, I was repping I like the stock.
All right, I'm taking another quarter off
Oh my
AMC here,
God,
45%.
Good time to have rewatched Dumb Money. So what are the all-time highs?
I'm actually watching that this afternoon. AMC new high day, gonna take some off here.
Fun fact, I actually got paid to post a tweet about that movie.
Oh yeah.
That was actually really cool. I can't say, like a Hollywood film. I'm working to advertise for them, even if it is about like all the stuff in my area. That was a cool moment.
Yeah. I'm gonna drop and come back so I can hear Casey.
He just said that I hate Wolf. I hope he doesn't come back. So you're good.
The pain.
All right, we're about 15 minutes into the market open. I know a lot of you guys like to watch out for these orbs, these opening range breakouts, which I learned the other day means kind of that first 15-minute or 30-minute candle. We'll be getting this orb, the 51 in 2 minutes.
I love it. SPY does have a gap to fill, a lot lower to the downside, so I'm still going to be in these puts until otherwise.
Kim, I don't think we've heard from you yet. Good morning. How are you doing today? What was on your Bloomberg TV? What were they talking about this morning?
Well, Evan, hearing you talk about orbs is kind of like when you hear like the old folk talk about like the TikTok.
Yeah, that's fair. That's fair. I'm slowly learning.
Sorry.
Hey, Kim.
Hi. I have game because of Mikey.
There you go. Yeah, he's been talking to Mikey's probably screaming his head off right now. Somewhere.
Mikey's making so much fucking money today, it's gonna be unreal. I cannot wait to freaking message him later.
So yeah, I was kind of wishing he was up here so we could say, hey, thanks, Mikey. I mean, I didn't go in heavy, but he called out some leaps a couple of weeks ago.
$17 calls, Kim, is on one of these spaces that he called out, and in the same day that I took them with him, they went like 100% real quick. I can't even imagine what they're at now.
Yeah, Kevin was talking about first one in, first one out. What did Mikey know? What did he know? He was on here banging the table on GME leaps a week ago.
There was a lot. Yes. There was unusual flow. For a while coming in on that was.
Yeah, but
you never know.
Different. Like this guy coming and making the post.
Mikey says so. Whenever Mikey talks about this, he says the same thing every time, and I think it's funny, but I trust him on it. He says the sentence of the internals are telling me, and then he explains his thought process on the stock, and he always just says the internals are telling me. I'm like, Mikey's got some kind of inside shit going on here.
Breaking news,
when
Mikey.
He calls out those long dated ones, my ears always perk up. You know, if it's the day things that he's throwing out, I don't really pay as much attention.
Oh, he's here.
Speak of the devil, Evan. Can you drop us both co-hosts? Also, I want to take some bets on Chimmy getting to 100 today.
I'm going to give anyone, but
not getting to 100% up.
AMC up 62%.
It's not letting me bring up Mikey. You should try, Wolf. Oh, there we go. Bum, 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 bum. All right. Oh, no. We're having some troubles here.
Good morning, everyone.
Good morning, Mikey. All right.
AMC, how you doing?
We were just how does this happen every time we're talking about you? It's like you hear us talking and there you are, you appear.
My rings start ringing. My ears start ringing.
Start ringing. That's what I could. We said game leaps. You called out 50.
Yeah, those $15 calls are up like 10,000%.
15. That's what it was. I thought it was 17.
Yeah, 10,000%. That it?
Something like that.
Mikey, I took AMC calls near the open right now. I took $4 calls for June. I'm up 65% right now.
Amazing.
I missed the GameStop. I almost bought some shares this morning when it broke $20, and I fucking didn't. So I was kind of mad about that, but I'll get my chance. It'll be all right.
Bob up 5% now.
I scaled more SPY puts here, by the way, as well. I'm out 3/4 of that position, and then AMC is up 65% here.
GME unhalted. She reached my target of 30.97. Watch this. Now she's gonna go to 31.30. If she breaks 31.89, they're gonna halt her up again.
Oh my God! What's the IV right now on these calls?
Oh, it's gotta be crazy.
Just watch.
So they're only offering up to the 34 strike. They're not even offering higher than 34 strike, and the 34 strike has 700%.
Oh, they have higher than 34 strikes. We have them. They're called $55 calls.
For this week?
No, we have $55 calls for January 2025.
Yeah, NVIDIA still seeing sellers. Now down almost 10 points.
GME, they're going to halt it down in 5. Fake halt.
Oh, yeah, there was a little pump there. I'm watching this. Tesla's also having a good day off of this, by the way, up like 3% now. I know we've talked about it, but still continuing higher.
Off of this.
I feel like when institutions see the big guys moving.
That's off the 1% financing news over the weekend. Definitely not off the gamma squeeze.
All right, there she goes. She retested at that $29 level. Now she's going back over to 31.89, and they're going to halt her up.
Yep.
Here we go. They're going to halt her up in 5, 4, 3, 2, 1, halted.
No way.
Go!
No way.
Fake
No
hold.
way. Oh my god.
That's fucking wild. He just called that live like that. Jeez.
5, 4, 3, 2, 1. And now it's halted. Ciao.
Halted, baby. Because I bought
Wait,
calls on that
why
shit
is
right when
mine?
it got
Oh,
on
there it
halted.
goes.
Wow, man.
Sorry, I'm
Those are
5
crazy.
seconds ahead of you.
It's that
Is it halted?
Google.
Yeah, I counted it down to the halt.
Mikey, right when it wicked down, when GameStop wicked down right there, I bought some $32 calls, and now they're already pumped straight back up, and then I got halted to the upside. Oh my god.
All right, so who wants to predict the first downward halt today with the time?
it honestly might be the next one because it only needs to move down like 7% or something, and when you're up 80% already, a small move down can do that and still be in that bullish formation. So I would be absolutely shocked if there is not a halt to the downwards at least 2 times today, probably for GME would be my guess.
Evan, do you mind explaining the criteria for a halt right there? Like,
I think there's a couple of. I think it's like a 10% move or 7% move, and then it's like a 20% move and something like that off of the open. I could look at it actually.
The 7% move is specifically for the index. I don't think that's for the individual stocks.
Rolls. A trading halt. Let me dig into this and see if I can find it for you guys.
Mikey, is the meme market back?
Yeah, I brought it back weeks ago.
Mara up 5.5% here. DJT up 8.5%. MSTR up 5%. Carvana up 2%.
Oh, there's other stocks?
What'd you say?
There's other stocks?
There's a few. There's a few others.
He's reading all the meme stocks, but he added Mister in there.
Coin up 2.5%. You know, these things move off of crypto, which certainly tends to move volatile with these things. Let's see what else.
Okay, so here's the deal. GME is going to unhalt at 32.17. Then she's going to try to go to 32.97. There'll be a power struggle. She'll go back down to 31.19. She'll bounce there, and then she'll go to 33.75. If she can break through 34.14, they're going to halt her up again, and she'll go to 38.
Mikey, you still holding Celsius calls?
Holy shit, she's ripping. Oh, my God.
Yeah, look at her.
Wolf, you were right. The 7%, 13%, and 20% is for the market wide. The on the New York Stock Exchange website, they say limit up, limit down is a mechanism designed to mitigate extraordinary market volatility and extreme price movements in individual securities. Prevents trades in individual securities from occurring outside specific price bands that update continuously throughout the day. So I think that's
AKA, it's at our discretion so that we don't lose a ton of money.
give or take, yes. You said the second part, but at our discretion sounds correct.
Yeah, pretty much. We have a stop button so that we can get out of our trades.
Tesla continuing higher here.
Takeshi, well done, and GME over 22K.
I see some flow coming in for Palantir.
Ooh, where is Palantir?
Also, the China names are also still on the move. PDD just took out last week's range, so PDD and Bob are having quite the day.
Who wants to bet that Vlad Tenev is on a heated phone call right now?
Robinhood stock was just up like 5%, right? I just saw a notification for it.
I'm not talking about their stock. I'm talking about the things they might have to
Oh,
do.
yeah. Fair.
Let's go.
Yeah, I just got a notification. Bob up 5% on the day.
Remember where GME will open, 32.17. Watch.
And you said 32.9 test you like?
32.17, she will open. She's going to go up to 32.97. There'll be a minor power struggle. If the power struggle wins, she will.
Sorry, Mikey. Walgreens is moving higher on a story right now that they might be selling their drug operations, the Boots company. So stock's up about $1 in the last 5-minute candle.
Be careful with that news play. That was a news play on WBD, I think a couple of weeks ago, and it already went on that news play. So news play that are designed to come out 2 weeks later are designed to fuck you, so be careful, please.
Interesting. Yeah, I'll be watching this candle here. Sorry for interrupting.
Meta's crapping the bed still. Shit. It's down 3%.
Yeah, oof, Meta's really.
All right, Derringer on hold. She's at 33.27. They're going to halt her up again in 5, 4, 3, 2, 1.
Oh, it's halted, yeah? Wow, halted up.
My GME calls were up 40% right at the open right there.
90% up on GME now.
Make me rich, bitch! Halted, bitches!
Fair enough.
You can't make this shit up. I mean, you can, but you'll probably be wrong.
You think another
Is that
gap up
4
here?
halts now?
Yeah, well, okay, I'll tell you where she's going. So,
Are we sending?
35.22 break, and she's going to 37.
This takes me back. Back in the day. I think my first real usage of this Wolf account was live tweeting the GME trial.
Mikey, your AMC calls too.
Yes, ma'am.
Where's that one going?
AMC, well, she's going to $5. And then after the $5, we're going to try for 7.
What's the what was the market cap this morning? Like 10 billion? Is this up about 10 billion in market cap today? 9?
I'll look for you.
Yo, Tesla doesn't have one red candle yet at the open today.
Yeah, I'm on the 5-minute right now, and it's trying to do the first one right now. Market cap, GME was 10.18 billion to start out the day. Nope, it was 5.34 billion yesterday, and it's 10.1 now.
I'm still confused what they do.
Sorry, you're breaking out. I can't hear you. That was a joke.
I would think crypto would be moving more here, but it's kind of just chilling.
My God. I'm still in full position on that shit. I haven't even touched it.
They sell like video games and other similar like adjacent products in brick and mortar locations.
I was kidding, but it's like, how is that worth 10 billion market cap? Did you say 10 billion or?
Yeah, it's 10 billion as of this move today.
All right, everyone, 2650 KSF. Vamos!
A little Coles action. Interesting.
Now!
Sorry.
Wait, not Kohl's, right?
No,
So it's,
KSS.
KSS.
KSS, got it.
Coles with a massive candle here. Oh, that's a 1 hour. Sorry. Let's look at the 5 minutes.
Remember, we have our 2750 call swings for KSS. They're ripping.
Yo, I'm gonna mute the spaces for a second. YouTube chat, how are you guys doing this morning? I hope you guys are enjoying this one. We have more people just chilling in here than normal, which I really do appreciate. So if you guys have any thoughts, any questions, any charts you want me to point out to the people, just let me know and I'll go in and do that. Obviously, it's not the normal stocks I have on my radar, but I'm happy to do whatever we got to do. So, anyone in the chat, any stocks you want me to point out, anything like that, we'll go in and do that. I appreciate you guys all for joining this live stream this morning. We still got probably like 2 more hours on here, so stick with it, stick with me, stick with the team, and I hope you guys are enjoying. Let's bring the spaces back up. Well, Paul with the fire emoji, appreciate you, man. I saw you write something in the chat too that I don't know if I remember. Paul. Good morning, everyone from Paul. There was something last night, I think.
That's what it was. CNN.
Shout out Ollie as well, talking shit about my Knicks. Yesterday was a rough day. What's up, Mike Lime? First time I'm seeing you chatting here. Welcome. I appreciate you joining in.
Halted. COSS halted.
All right, bringing the spaces back up.
KSS or COSS?
KOSS.
Wow, those BB, I looked at the 3.5 calls and they're already up 30%.
I've never heard of this KOSS company.
You say BlackBerry? They're already ripping.
The BlackBerry
Already,
calls,
yeah.
I looked at them. They're already up 30%. Wow, cost.
I
remember
bought them
this
at
one.
16. Where are they at?
The
Just
542.
BlackBerry.
Holy shit! BlackBerry calls.
Yeah, BlackBerry calls moving right here.
Yeah, I got them at 16. They're at 24.
50%. Jesus.
Yeah, I'm scaling right here. Actually, let's see if I get filled. I'm gonna put a fill at 23. Filled.
You can't make this shit up. Oh my god.
I'm buying another house.
Yeah. You buying a house for the Spaces crew? We doing some live Spaces from in there?
Hell yeah! Let's go.
What's
to
up,
Puerto
Taco
Rico.
Lover?
Hey, come join me.
Let's get it.
We have.
Alright, is GameStop about to unhalt here in like 15, 20 seconds?
I know.
Alright, so when she unhalts, she's gonna unhalt at 34.90.
Jesus Christ.
Oh
There she
my
goes.
God. Mikey, oh shit.
Boom.
Whoa,
Holy
see
shit.
me up over 100. Okay.
All right, she's gonna halt up in 5, 4. Stay calm. She's gonna halt up. There you go. She's going. She's gonna do it. 5, 4, 3, 2, 1. Halt, you bitch.
I exited. Oh, I got to scale. Oh, Jesus.
She halted. Yes.
Oh my God, I gotta scale it. I gotta scale at least, Mikey.
GME up 110%.
Oh my God. Oh, Mikey, I was in those $32 calls. I got a scale for $1,100 right there, right before.
That's amazing.
Holy shit.
Yo,
Are you not entertained?
guys, retweet the space if you haven't. We're 10 people from 1,000 people.
Ooh.
Oh my God.
Let's go. What's AMC?
Okay, so
If you put GME
AMC.
in the title and AMC,
20%.
more people.
Wolf,
Yeah.
Wolf, can you hear
your
me?
call. Yeah, I
can you hear me,
Kim.
Wolf?
Yeah.
Okay, I just wasn't sure.
He was just
The
choosing. He
premium
was just
on-
choosing to ignore you, Kim.
No, I would never do that. That's what Evan does.
I know.
The premiums
No, it's
on
all good.
AMC are actually holding up very, very nicely. Even on this pullback here from the very top, when I was up 65%, I'm still up 50% right now.
9,100% of the $30 calls for GME. Over, I don't know, 15, 20, 30, 40,000 on the $15 calls.
Oh, this is so stupid.
This is so stupid. It's great.
It is. Oh my God, I fucking love it, Mikey.
What are the points of these halts?
My God, they're at $23 to call. The $15 calls are at $23. You know how much we bought them at? Like 4 cents. The $15 calls for May 17th. We bought them at 4 cents. They're at $23. Oh my God.
That's nuts.
That's crazy. Holy shit. Yeah, this might be my fucking. This might beat SMCI 108,000%.
It's fucking wild that all of this is from a tweet from Roar Kitty just saying he's back. One meme, 15 million views or whatever it was.
And not even any words. Just see, and that's why I said what I said earlier. It's like I don't care about the stock itself or the company or whatever. None of that matters when these kinds of plays happen. When just the right people and the right words or people just come together for these kind of stocks. It does not matter. I don't care about the IV. I don't care about the cost of the premiums. I don't care about any of that. It's just you just dump money into it and you hold on for the ride, but you expect to lose it all if it goes against you. But it's so fucking ridiculous.
Yeah, but I think for non-savvy traders,
Ali, you a big Barstool guy?
the hard part. It's getting out or not like, what you've seen with
100%.
like a lot of GME, AMC people.
Frank, we might get
that
some chance for some sales here soon.
Yeah,
get involved
I
with
agree.
a cult on an ongoing
Yeah.
basis.
Short in the market.
Yep,
I mean.
that's a
Yeah.
good point, George. That's why this is really great for traders who know what they're doing. They come in, get their premiums on days like this, and then a lot of people are going to be left holding the bag. Don't be that person who buys high, sells low. If you're a trader, you need to let your winners run, cut your losers quick, and go from there. But I also really...
Don't. Oh.
There are hundreds of terrible companies out there. I don't see why you would try and short a company with a cult following. So once we get out of this, we'll see. I just don't see why. There's plenty of terrible companies out there. So
Heads up, also, if you're trading these right now, don't trade them on Robinhood because they're gonna fook you on those premiums.
Yes.
When GME hits $38, everybody got to get up and walk like Conor McGregor. Let's go.
With the arm swinging, you mean? That's how I pictured you walking to your desk today.
I need to find that tweet. Let me look.
Also,
I don't know what tweet you're
shout
talking
out
about from Big
Ariel
Cat.
with the beautiful call on Alcoa. Check it out. Up about 7%. Great hourly looking chart. No reason to get out. Only looking for reasons to add.
Oh,
There you go, Ariel.
Oh,
there is no way this is happening again right now.
Recursion's up 20% right now too. RX ticker.
All right, GME 3670.
All right, she's about to unhalt. And there she goes. All right. I think mine was a little bit behind.
Yeah, weird. Mine was too. The fuck?
Mikey, I thought you were 5 seconds ahead.
Well, it's unhalted, but I got no. There we go.
There you go. 37, 32, 38. Come on, get to my 36. 34.
Contract
They're gonna halt her down. They're gonna halt her down in 5, 4, 3,
I think it already halted.
2, 1. She's gonna halt down.
I think, did it not already halted at 99.7?
Ollie, I'm just seeing
Yeah,
that
they
tweet
did.
now. I commented.
According to Unusual Wheels, yeah.
Yeah, they halted it down at 34.87 on the.
Thanks for letting me know that. Seeing that tweet,
Can
Ollie.
someone explain to me how this fucker counts this down all the time and it hits? How's that possible?
Because you've done it enough times, Mikey. You know.
Is that 6 holds now?
Yes.
Yes, Albert.
So believe it or not, AMC is making a new low of day. My calls are still up 27%.
Ooh, yeah, this move in AMC, it's given a good little bit back here on that 5-minute candle.
Now they're up 15%. Now they're up 12. They're still green. This is ridiculous that they can still be green when I bought this when it was at like 350.
That juiced volatility.
Oh, I just got stopped in profit there. So now
Nice.
I'm all out. And now my account is up 5.5% on the day overall.
Looks like they halted BlackBerry maybe here. No, okay. No, it's just moving very slowly now.
Yeah, you didn't say that with much confidence, so.
Well, it just was sitting here at $3.14. It just wasn't moving. But
Clove is still ripping.
Oh, God.
oh, how about that?
Are we just picking out, like, the worst companies from the last couple years? Like,
I
oh.
think it was up like 6% whenever you mentioned it. It just went over 10%.
Yeah, Clove.
The real question is, Wolf, are you in the arena?
I am. I'm battling in the arena right now.
Ooh. I'm actually going to the arena tonight.
Antitrust complaint.
Oh, yeah?
What Merrill says.
Trying to get boat race like last night.
Regarding a patent.
No, different team.
That's
Oh, okay, okay.
that from Reuters.
Snow quietly up 2%.
They couldn't handle. They couldn't handle my guy TJ.
Evan,
TJ
guess what else is
McConnell.
up?
Costco.
That you were going to keep track of wheat.
Ooh, wheat.
It's ran. Remember I said market
Yeah.
wheat down May 7th.
I need to figure out which. Wheat US.
Some sales here.
Yeah, it's a future. It's /XW, but it's gone up quite a bit since
Nope, I see it.
last week.
Thank you. Trading View has a lot. Interesting. Yeah, it's nice moves here. Let me pull out to the 1 day.
I mean, it's not a GameStop that Mikey called out, but
No, I'm seeing we were at like 560 and it's at 680 now. That's quite the big move.
Yep.
Nice job.
Portnoy's trading them live.
I saw him put out the tweet, and Big Cat put out a tweet like, "I wish I knew how to make money in the stock market." I commented below, "You should come join the spaces more."
Oh, for Big Cat?
Yeah. Hey, listen, you got to take the opportunities that are in front of you.
I just need them to break break back out. Evan, you got to post it if you can find it. Remember when they like had that thing on CNBC where it was like Zoomer language used for the markets? And it was something like what this means, what the kids are saying in regards to stocks. I'm trying to remember the graphic that they put up.
Yeah, I actually do know what you're talking about. They were like talking tendies and stuff like that.
Yeah. The tendies, hodl. Yeah, if you could find that one.
That was a deleted memory. Just all came back to me.
Oh my god, I think I know this. I think I can find it. Oh.
GME will open at 33.19.
Yeah, AMC fucking wicked me out the last of those calls there on that drop.
It's back up again, Casey.
Yeah. I might re-enter those same freaking calls again. We'll see.
So, since today's a good day to talk about AMC and GME, I'm wondering what people think of. I think one of the more legit conspiracy theories in all the meme stock stuff, that the AMC trade was invented by institutions to get people to sell their GME stock.
No. This move was all coordinated. You don't load $34 and $55 strikes at that high of the premium option 4 weeks ago when I started alerting this shit at $10. There's a reason why they did that.
I'm talking way back in the day. I'm talking back at the original GME.
Oh, I thought you meant now.
No.
I find it weird that TD and Charles Schwab's last dates today. GME is running. I don't know.
Frank, you got any sales up there?
I saw that small.
Mikey, that's a pretty good point. I never thought about that.
It's only Monday.
Manic Monday. I've heard that term used before.
Sketchy.
So
Oh, Jesus.
this is just insane. Literally just from a tweet. Oh, it's moving lower. That's going to be a downward halt. Is it halted already? Nope, never mind.
Oh, I'm glad I got my scale.
Should we be watching AMC, who's not being halted as much, to kind of give a thought into where GME might be going?
What a great day.
I was muted that whole time. Should we be watching AMC to where we think GME might end up going, or are they just doing a little different?
It's musical chairs. You don't know whether it's going to last. I mean, it's obviously this started weeks ago when Mike started seeing those options trading. So you're probably, it's not going to last. Everything's different every time. So this will be a shorter time spike. But, people are going to get really bagged in this, which is pretty sad.
Yeah.
AMC's always going to be a different animal just because Adam Aaron probably has the itchiest dilution trigger finger that I've ever seen, and for good reason. But that makes it harder to get in on a quote-unquote short squeeze when you got a guy that's ready to dilute anytime something good happens for the company. I'm
shocked that they still have the meme stock reputation, given how many times they've sold shares and diluted shareholders.
Hey, they've fully leaned into it.
And they really need to. There is no survival for that company unless they can get the cash to do a turnaround. So it's the right move from a company perspective, but they're a popular meme stock, and I would think that would be something that would piss them off.
Tell me if I'm crazy, but AMC had a 10-to-1 reverse split early this year or last year?
I think so.
Correct. Yeah.
Whatever happened to the other share class AMC tried to make too? Didn't that get folded back in or something?
That was one of the weirdest.
They're gonna halt it down again.
I've ever seen. Yeah, they basically the shareholders voted down dilution, and they did need to dilute to keep the company alive, but most of the people who own the shares wanted the short squeeze, so they voted down dilution. And then Adam Aaron, and this is actually something that I was warning people about. They basically had these treasury shares, a special class, and they used the special class to make a new class. And that was APE. And then there was a big fight in court, and there was a few extensions because people they basically didn't want it. But the company would have gone bankrupt if they didn't. So basically, it's a very interesting situation because typically you wouldn't want to go against shareholders like that, but you kind of had to because otherwise they were going to be dead in the water. So yeah, it was one of the more interesting situations I've ever seen. And it's crazy that Adam Aaron is still such a hero to so many people when he basically went against their vote behind their backs to do something shady like that. But that's the thing about AMC shareholders. Most of them haven't seen other companies or know how like weird and kind of backstabbing that is.
Yeah, that was a weird one.
Okay, let's be honest. The reason he got away with it is because most of the people that were trading and investing in GME have no freaking clue what any of that stuff means on the back end of company and fundamentals and raising cash and all that. And all they knew was stock go up, meme funny.
To be fair, though, if I see my CEO without his pants literally on a call, yeah, I don't know how I feel about that. But
all right.
We'll let it go.
No, the funniest part, though, and Evan, you saw this with me, was the accounts that absolutely stand for him for like a year and then turn their backs. Those were the funniest.
It is interesting to see GME getting this pump and AMC really not as much. A little bit, but not as much. Let me change the 1 hour here on and AMC and see what I see. It's basically giving back this entire pump.
Halted under 30.
Google partnering with HP to start commercialization.
Oh yeah, AMC back on. What's happening with Apple? I see it's up 1%, but they had that big news, right?
Yeah, there was a story on Friday night that they are closing in on a deal to start using OpenAI's technology. Google was moving lower in pre-market today on that story, but I don't know if that's just a leveraging tool to get a better deal from Google. I would say still wait out. And it could honestly be both of them. They could just use both chatbots in it.
I thought it was Microsoft.
Yeah, it was Microsoft. OpenAI was the person they were close to signing the deal with, and Google was moving lower because they were not going to be the one who was chosen. At least that was the market was thinking.
Okay.
Yeah, that's what I meant. But like I said, we don't know anything. I think this is just a leveraging tool from Apple, which makes sense. And yeah.
Oh, yeah.
So let that one play out.
Yeah, Google's down a lot right now.
Yeah, it's off that story from Friday night. HPQ was the one Google just did a partnership, not HP. HPQ is moving higher a little bit off of that one. It's weird they chose Q at the end of their thing. That's generally for companies that go bankrupt.
Another stock that both Rachel and I were calling out were those food stocks. Have you guys seen Sweet Greens? That's one we talked about last week.
They've been killing it, right?
I think it was like at 23 or 24.
Oh, yeah, I remember you mentioning that one.
Yep. It was like at, well, I can tell you exactly.
No, I'm looking. Thursday, May 9th.
23.
Go for it.
I bought it at 22.82 and 23.62.
I can't lie to you. Kava makes me a little bit upset because, like, I love this. I love the food itself, and I was saying at, like, $30. Like, just give me down 35% from IPO price, and I'll start buying in, and I never bought in, and here we are at 78. Fantastic food. I don't own the stock. If you give me a good pullback, this is a name I'll probably get into. I love me some Kava. Wolf does not, by the way.
Me too.
He said he hates it.
And Sweet Greens, I mean, literally, I hadn't even really heard of it. It was just because it's brand new here, and it was like, because there was a line outside the door. I'm like, what is this place? Need to look at the stock.
I enjoy Kava. I just can't digest it.
Yeah. I have problems with other stuff. I can get Kava down. Sweet Green's fine. I never really had it until I was hanging out with stock market nerd Brad, and we tried it a couple times, and it was pretty solid. But
it was pretty good, yeah.
There's a lot of them in New York City. There's a lot of them in New York City.
They don't have them in Seattle, and I've had them in California. They're amazing. I know, Mikey, you've been calling out those calls for a while, Kava, but I'm not sure if you were calling out Sweet Greens.
It does. With Sweet Green, it scares me a little bit at the amount of competitors I see just around. Just Salad and Grab and Go and whatever. I've seen so many salad shops like that open up, and I haven't seen as many Kava. So that's the only thing that kind of scares me a little bit.
That's a good point. Kava's more the Mediterranean, has all the different. The game's open again.
There's a place called Dig or Dig In or whatever it is, which is kind of similar. All I'm gonna say is New York City is crazy expensive and has a lot of drawbacks. The food is unreal.
Kavas are starting to pop up here in Miami.
Kava is? Nice.
Yeah. They're coming out of nowhere, to be honest. Didn't know what it was until maybe 5-6 months ago.
I mean, I just wanted to buy Chipotle at 400 and didn't buy it because I thought it was too expensive, and look at where that went. So, and I never did buy it, by the way.
Yeah, hey, well, we'll be back under that $400 mark soon once they do that 30-for-1 stock split.
The time I should have bought it is when they had the salmonella or something scare, and
Yeah.
it dropped like a rock.
Let's be real. Chipotle has had multiple of those, and if you told me there's one coming soon, I wouldn't be kind of surprised. It's like an earthquake, or like a volcano. It's like it feels like it's kind of due.
Took a little add up in there in the short against 300.
Yeah, I'm short.
Maybe those salmonella scares are when the insiders rebuy.
Well, apparently here's the real alpha.
Watch the ELA $90 calls.
GME, not the stock, but the coin trading on Sol went up 250% this morning.
GME open.
Lol. Someone made Kitty coin and it's up 10,000%. Oh my gosh.
Oh, there's a kitty coin? Wow.
Roaring Kitty coin. This is all so bad. Oh man.
Strategic industries like semiconductors and like clean energy.
How do you think Ken Griffin's morning's going?
Of good jobs and national security in the decades.
Citadel makes a lot of money on this meme stock stuff. Like what I heard about the retail business specifically is that it took a little while to get it up and going, but especially when the market is choppy, like and I kind of mentioned this earlier, but
DME halted
look
up
for this trade.
GME halted up again.
Love to see it.
GME, I see $60 calls for January 17th. I see $40 calls for June 21st.
Janet Yellen is speaking right now, by the way.
About Jimmy?
No, about China.
She's yelling.
A lot of China talk. Yellen says it is unacceptable to be dependent on China in key industries. And I'm fairly certain, I guess she's on CNBC for whoever's listening to that. I think that's her.
Celsius new high of day, bull flag breakout.
Oh yeah.
I'm still in those SPY calls that I called out about 5 minutes ago.
Ooh, Celsius up 5.5%.
Janet Yellen. Didn't you hate it when you're going to do something and then you forget it? And then it's just sitting in the back of your mind like, oh, what was it? Shit. Oh, that's what it was. Nice.
Stay off the weed. What's up, Josh?
Is MSOS doing good today or something?
No, you were just saying you forgot what you were thinking you had to do.
Oh, wow. That's kind of fucked.
Order filled. Order filled.
AMC popping up again.
Wolf, do we have Will coming on today?
We do at 11,
Nice.
yes.
No, maybe we got to ask him about the 2x GME.
Oh, true. That'd be funny.
That would be funny.
$4 calls. Fuck you, AMC. Stop me out just to go straight back up again.
Stay off the weed. That was funny. That was a funny little comment there, Wolf. I had no idea. Once you explained it, I did chuckle.
There you go.
Yeah, I thought it slipped by you.
What was the name of the other coin, Wolf?
I'm just looking at GME and Kitty coin.
What the hell is Kitty Coin? Come on, guys.
It's like literally named
Oh,
GME
come
coin.
on.
Yeah, I mean, I'm just looking at the ones traded on Sol because there's very low trading fees.
Wolf, is Kitty Coin doing good?
Kitty Coin's up 11,233%. It was literally pretty sure created like not that long ago.
Guys.
Yeah, that sounds like a great place to store my money. You know, what could go wrong with Kitty Coin?
You know, shout out somebody who did make this at the end of March. On March 30th, they made this, and then it sat dormant and did nothing.
Was it Roaring Kitty who made it?
And then when it went up 11, nah, definitely not. It went up 11,000%. But there's not much liquidity on these things.
Wolf, did you make the coin?
I actually have not made any coins. I'm sure I could figure out how. Apparently it takes like 5 minutes, but yeah.
Why don't you ask Billy?
That's a good question. I don't
You know what,
if they do
Wolf?
it the same way back when Billy was doing it.
You should get him on and do like creating a live shitcoin with the founder of Dogecoin and just do it on the spaces with him.
AMC's running again now.
Don't remind me, Kim.
I'm sorry, Kim.
I just checked the options chart for the contract I was in. The low of it was 60, which was exactly my stop in profit I had on those contracts, and they ripped it back up over 55% right now.
Is Jamie halted again right now?
I got out of some of mine too, but I kept I just kept some.
Yeah.
I basically got out of enough to cover my costs on it, but.
Is GME halted right now again? I'm not seeing it moving.
It appears so on my end.
It appears so. It's back at least.
Spy calls are green. I'm not trimming personally. I'm waiting to break above VWAP in the 90 MA here, pop up to the 21, which is around another 15-cent pop on SPY. I should be able to make a scale here in just a second.
GME's unhalted. It is moving back up a little bit here. It's up 85%.
Okay, Casey, I'll make you feel better. On Friday, I sold some of my GME, the lower strikes, because I'm like, I don't need this many. I'm not going to be like a YOLO person. And I sold them Friday.
Oh, man.
But I still have some, but I was like, I need to be responsible.
Especially the weekend, though. The weekend, like swinging over the weekend, that always,
They were still June, like I think I bought them because I saw some flow on them. They were like 26. Those are the ones I sold. So I feel you. But I did have the leaps.
Crazy stat here. Market's been open for about 56 minutes or something like that. GME has actually traded for about 10 of those minutes.
All right, here we go.
So at the top of your screens, I shared with you guys the chart I posted on GME about 7 days ago. All targets have been now reached.
First target hit here on SPY calls, taking a fill. Gonna move my stop up.
This is like the first day in my entire career where I'm not watching SPY as hard.
I know we're all watching game.
Everybody's wondering if Mikey's going to get his 55.
Omar just put out a tweet that he bought 5 shares of GME. He's like, hey, why not? I guess that's the type of day it is.
5 shares?
Actually, Daniel Loeb also just put out a tweet bringing new meaning to the expression, every picture tells a story. And it's literally just the upside chart in GME. Daniel Loeb's a big institutional investor, very well known. So even he's tweeting about this. And casually, that tweet last night has 12.7 million views from Roaring Kitty, which is insane. And I saw it going everywhere, so it probably has more uncombined people have seen it. Weird.
Big candle on Apple here. New high of day, ripping above pre-market highs.
I was going to say, that better be an upside candle.
Yeah.
Well, how much longer are you doing spaces?
We're going to run this one for at least another 30, and then, we're going to keep it open, and we're going to have a institutional guy, Will, come on, and maybe we'll chat a little bit about this with him, too. But, yeah, at least another 30 plus of trading.
Okay, I'll be right back.
He has to go make a $2 million deposit into the bank from all the money he just made on GameStop.
He has to drop the children off at the pool, if you know what I mean.
I thought he was going to get the wheelbarrow to carry around the nuts for the day.
No, I'm actually going to go call guard, security, and Brinks to see if they have enough trucks, BRB.
Mike, you're so funny.
I fucking love Mikey.
Me too. I love you all.
Mikey best, though. Wolf least.
There you go. Now rank everyone else. Okay.
Janet Yellen, hi.
Did you see?
Yeah.
Did you see? What's it called? Brad posted, and he was like, "I personally would be fine with not doing the whole 2021 meme stock squeeze thing for dying businesses again." And
Is he just getting cooked?
No, I commented the GIF of the dude yelling, "Boo this man! Boo!" Yeah, it's coming back.
Well, remember, once these meme stocks ran, then that's when we had a big market downturn for the next, I don't know, year.
Yeah. Do you want to make memes or do you want to make money?
Mm-hmm. So it could be like a tell, right, Frank?
Yep. Oh boy, GME coin spiking.
What is GME coin? What is happening?
Dude, there's coins for everything. There was one day this was probably, like 3 weeks ago, Wolf was on here just saying a few names of these coins that...
they're so ridiculous.
Oh, they're out of pocket.
I'm gonna buy some.
There was like some names he was saying, I was like, are you shitting me? Somebody really has a coin with that name?
There's some really like fucking racist ones too, honestly.
Okay.
There's some really fucked up ones.
I only buy the Jewish ones.
Spy's looking.
Is there a wolf coin?
Weaker.
I'm sure there's many wolf coins
right now.
Yeah, I'm about to get stopped on the rest of my calls. I'm $1.
Here we go. Come on down, baby.
Wolf, is it true that the meetups for Wolf Coin is just an hour of you guys all howling together?
In our furry costumes, yes.
Gotcha.
All right, let me grab some of this GME coin.
I guess there's issues with Charles Schwab accounts right now.
Nice.
Which sucks because I'm supposed to have like 10 trades execute on Peakbot today on my Schwab account, but it might not do it, I guess. They're going to cost me money.
They're good, though. If you call them up and they cost you money.
On my short on tech.
Yep, I just got stopped on the rest of my calls. It could bounce here and put in the higher low, but I'm not letting anything go red after the morning we've had.
One of the
AMC's breaking previous high.
One of the good things about those type of brokers, though, the real kind of old head institutional ones, is their customer service is actually pretty good. So if you do have a problem, they'll fix it.
This is big. I'm scaling more.
What?
Oh, great short.
Here we go, baby.
Nice job.
Shark, what stock? You're in SPY? SPX or something?
Yeah.
I've shorted the tech sector, yeah.
Oh, was that short XLK or did you use something else?
No, NQ, the future.
Gotcha.
But you
This NVIDIA breaks its neck last candle.
I've always used Schwab for my common shares and like just long-term wealth, and I've used Thinkorswim to trade options, but that's not really an option for me today, and no pun intended there. And I'm just bouncing around between like Robinhood and Webull and all these accounts. I just have a couple $1,000s in, but I'm not sure what my long-term solution is going to be.
Stock Sniper. Wolf will send you a DM. We kind of done a little work with this company called Trade Aries, and they have a really good fills and stuff. We're not currently doing anything with them, so
that's where I trade.
Yeah, maybe check that one out.
I traded on them this morning.
Wolf, send over the link.
I can. It's also just tradearies.com, but if you need a link, I can send. I'm going to the NICE tomorrow. I wonder if this is going to be like people talking about this at all.
You should ask. If we hold up here, that can be some good post for you, sir.
Yeah. Imagine if this is going on and then the banks also crash.
You need to get in front of Jim Cramer and ask him what he thinks of GME.
Jim.
What do you think of GameStop? Is Roaring Kitty your hero?
Something like that.
I can't wait to watch that movie this afternoon.
I would love to get some stats around how many more people are going to be watching that movie now that the stock actually went up today.
Oh, it's gonna. Yeah, the streaming for like today especially.
Frederick, it's weird, right? We're back to watching GME and AMC and all these meme stocks. It's a weird time.
I mean, it's
true.
You're talking about Dumb Money, right?
yeah.
Yep.
This is even on. Is it on Netflix or who has it?
It's on something. Probably on Netflix now.
How to watch
It's a good movie.
Dumb
Netflix.
It's on Netflix.
Yeah.
The guy
A few other names, guys, sorry to interrupt. A few other names that are definitely worthy of watch that have had good earnings reports and, kind of accumulation is Transmedics, TMDX, and Toast, TOST. They've both held up incredibly well since their earnings reports. So I do own both of them. And Toast I bought on the earnings gap up. Transmedics I actually bought before in the lower 80s. And on the earnings gap up, but they're definitely holding up and flagging up nicely. And I think maybe just a few more days possibly. And, maybe when the market firms up, they could definitely be good add-ons. They've held up incredibly well since earnings. So likely to that maybe see some continuation.
Yeah. I've heard Shy talk about Transmedics for a good long time here. So shout out to him.
Yeah, it's a nice company. I mean, they got punished. They got punished for buying a bunch of planes a few quarters ago. But they've been pretty much nothing but going up since then. And the nice part is they've got really great accelerating earnings and sales. And then I'm sure on the other end of that spectrum with Toast, if any of you guys go out to eat, maybe as often as I do, or any local bar, it seems like almost everybody's utilizing that platform now. If it's not that or Square. Something else. But Toast is super popular here where I'm from in Illinois, so.
Yeah, I've seen Toast a lot, too. What did I get yesterday that I saw it?
Yeah, it's not just restaurants. It's like restaurants, small liquor stores, bars, whatever. It seems like everybody can use them, really, if you're a smaller business.
Hey, appreciate you, Frederick.
Another meme stock that I completely forgot about that one of our listeners actually just posted. It is Virgin Galactic Holdings.
Only 301 drop frames today, not so bad.
That's another ticker that tends to run as well. That's up 10% this morning.
Oh, yeah.
Yes, sir.
I remember trading that. It was like $30, $35.
Yeah.
That thing could move back in the day.
It's a buck right now. It's a $1.04.
When while we're talking about all these meme stocks, I think it may be a moment of silence for Bed Bath & Beyond, which was a part of this last time and is now gone into the Beyond.
Yeah.
Might be in order.
Oh, yeah. Beth, yeah.
Rest in peace.
The money that I made off of more money than GameStop and AMC actually was a stock called BBIG. That's one of my biggest options wins, and it was around that same time. Just another stock that was running. That's another one I need to check on. There's another ticker called SPRT, but it's been delisted. BBIG is 0.003.
You have me going back to looking at some of the other stocks I was tweeting about with GME and AMC back in the day.
Yeah, like if you go look at BBIG, this stock right now, again, the price of it is 0.003. At one point in time, this stock hit $250. That's absolutely insane.
Do I repost this one today?
What happened? I got no idea. I remember I bought in some options when it started to break above a buck or two.
Up here.
And I got into $3 calls, and I just kept rolling them to 4, 5, and 6, and I caught. The big move up at the, I think it was 2021, February, March time. It was ridiculous. And then it just completely died.
All right. So I'm back to when Robinhood was restricting stuff. Express, which also recently, there was rumors that they might be declaring bankruptcy. I'm seeing Naked Brands on here as well, and Nokia too. Some of the names we were talking about back then. Cost is on here. Genius Brands, GNUS is also one that was in this Robinhood thingy.
How is ticker NKLA doing this morning?
Oh, Nikola. I feel like even they'll hate Nikola. Let's look.
It's got a bull flag right now. It's up 6% on the day. Look at that.
Fair enough. Still lower than it was yesterday, it looks like. 60 cents. Yeah. Jeez. I haven't looked at Nikola in a little.
I know. It's like I haven't looked at any of these names since the last time this happened. You're looking at the price of them now, and you're like, oh, my God, they freaking fell off.
Yeah, what happened there? Fair enough. We kind of knew that was going to happen. What's the heat map look like for today? Nothing crazy on this heat map. It's just these meme stocks going off. Tesla standing out. Intel standing out to the upside. Google standing out to the downside. But besides that, it's mostly split. I'm seeing CVS moving higher. I wonder if it's around that Walgreens announcement. Pfizer with a little bit of a bounce back day today. Walgreens Boots Alliance still up after that story from earlier. Let me look and see what it's been doing. WBA. Switch over to the 1 hour. Yeah, Walgreens has nice continuation. Order filled. Frank, Shark, what we doing? Order filled.
I'm just trading around a short, small.
Not GME or GME. You shorting the.
I am not going near that.
I
It's
figured.
gambling. Yeah. A fool and his money are soon separate.
Frank's been all in on GM. I just didn't know that.
I actually, and many of you guys don't know, Frank is actually Roaring Kitty's brother.
Yeah, right. On his door next week. He
Frank.
probably has the attorneys all set already.
Yeah, I mean, the amount of drama that this guy is about to, maybe not drama, but the amount of eyes that are about to be on him now, it's going to be ridiculous.
They're going to look at his time in sales. They're going to look at him.
They're going to put him under the fucking microscope now after today.
Of course.
Who under the microscope?
Roaring Kitty.
If you were in early, it's awesome. But and you had those from here, oof, it's going to be different this time. There is a big short floating, but that they can ride that forever.
What is that? Like the 20th halt?
Guys, my computer is shitting itself right now. So sorry if it is. Cannot handle this.
That's absolutely ridiculous.
See, the retail thing.
I'm gonna have to close some stuff.
But what happens?
Get rid of that.
The institutions short the stock if they can get to borrow, and then they buy the crap out of the calls, and they just ride it with no risk until it ends, and then you make them on the downside. It's a complete blow up.
Yep.
Yeah, I'm dropping a bunch of frames.
So if you're in early,
down,
it's a home run, but then it's a living nightmare for those who are stuck, and then they start calling the brokerage firms and telling them they're not treating them well. But that's how market makers have to protect themselves. Someone's got to sell those calls, right?
Yeah, I mean, in situations like this, when you have the capital to be able to put yourself in that kind of position to lower your risk, then you're going to benefit. But the average retail trader, at the end of it, they're going to be the ones that get fucked.
Institutions are all run off computers. It's no emotion involved at all.
Yep. So it's easy for that to happen.
So they keep thinking that the shorts are going to get forced in. Some may, but they really won't. They'll just hold and keep buying the calls. Taking the premium. It's really a sucker's game. Whoever holds the last chair, you know what I mean, is going to be the loser.
Yeah, if the first one didn't blow up the margin, this one's definitely not going to.
Amazon, new low of day.
And as the margin demand goes higher and higher and higher, everybody will get squeezed out. Because firms like Hood, if I owned Hood long term right now, I'd be so fit. I'd be actually kind of lightening up my position on this pump.
Ooh, Hood is not looking too bad. Yeah, Hood's not looking too bad today.
No, they pumped it on it.
Yeah.
I remember back in 2021, Hood was kind of inverse of AMC and GameStop for a little while.
Yeah.
The Reddit community hated the stock.
I could never own Hood long term because it's just it's a ticking time bomb. Their business model is screwing over their customers.
I disagree.
And there's only a matter of time before they have another big whoopsie. And who knows when that is, but it just makes it very difficult to own.
We talked about Chipotle's whoopsies though, and here we are significantly higher. I find the broker space to be incredibly difficult. I own some Robinhood, so take that from here. A very small amount though, very very small. The broker space,
changed, right? It's got to work out of that reputation, and this kind of hurts it a little bit. This is why I would sell a little.
But listen, the broker space is dog eat dog. It's extremely hard to differentiate yourself, and Robinhood has done a really great job at getting one of the lowest cost per acquisition cost in the game, which is game changing. Robinhood's problem is they don't have the technical ability at this point in time to level up with traders as they go from the novice trader to more advanced people. And what they need, and even just a new investor up to someone who's more advanced and doing this for 10, 15 years. So I personally, like I said, I don't love the broker space. So I don't know how heavy I'd go into it, but I would prefer investing in a company that has, at least to this point, solved the cost per acquisition problem in that space better than others have, and in the bet that they can continue adding new features. So I think Robinhood has continued to do that, but we'll see. It's a difficult one for me, but I think this is a company you're going to see continuing to expand, even what happens over the next couple little bits or years with the meme stocks.
I completely agree. In terms of the broker space, that they're probably one of the better ones to own, because it's just kind of like, it's a shitty business. That's the extent of, like, they end up having to screw over their customers because it's just so hard to make profits in that business in the race to the bottom. So, like, I definitely agree with you, but there's not really any brokers that I like. But in terms of, like, the product, I mean, they revolutionized making spreads, like, actually accessible. Whether or not that's a good thing is really debatable, but they're a great product for newer investors, especially ones that, like, have no idea how to manage risk and need their hand held and don't want, like, naked options, which is an even worse idea, obviously. But I think the margin pressures on the brokers are just going to get more and more extreme. And unless you've got some kind of wealth management play, I just don't think you're a good business long term.
You know, George, I agree with that. When people say, like, they're looking to start trading options, you know, I think Robinhood is great for learning how options work, because it's very self-explanatory how their chains look and how they show the percentages and all of that. I like how the company did create, like, it's Robinhood Gold, I believe. Don't quote me on that. I'm not sure the name of the product, but that was another source of revenue for them that I like. I like that they're doing things like that. I find it interesting, though, how they're able to offer 5% APY. You know, I feel like that's a pretty big expense for them.
Hey, real quick, I just went ahead and put together a meme on GameStop. I pinned to the top of the space.
By the way, Stock Sniper, they have a promo right now giving some people 5.5% APY.
That's crazy.
I'm at 5.
That's better than most money market accounts.
I mean, can you drop whale codes?
Ew. I'm at 5.25% on my APY on Robinhood Gold.
Shy, you seen the Big Short, I assume. You see the meme I just posted?
Let me take a look right now.
AMC ripping back to the upside here.
Wolf.
That's a good one, Wolf.
Not getting GME in the post was probably a mistake.
I know, I could.
Whale, hello there.
Whale, hello there. Good morning, sir.
Good morning.
Whale, good morning. Welcome to our humble abode.
Oh, thank you. Happy to be here. All right, I edited it. Oh wait, Shy. I think you. Oh, let's see if it. What happens.
Jesus, AMC, stop.
Oh, it removes it. Shy, you gotta hit the edited one.
Edited. Hey, shout out Futbucker for winning the $100, $200 for Predictogram.
I don't know if you're allowed to say that on Spaces.
Bucker,
AMC
not.
looks like inverted head and shoulders, actually.
It does. It absolutely has an inverted head and shoulders here on the 5 minute. It's ripping. Those $4 calls, I had them at 55 and they went 60%. They went back to 60, stopped me out.
Chat, I'll be back in a second. I'm going to fill up my water. Leave you guys with the Spaces. Don't do anything weird.
I think Mikey had called these out. I don't know. It was a while back. And mine were underwater, and now they're up 240%. This is for the June 10s, and they're up 240%.
Frank, you still in, or are you all out?
I'm out. I'm flat. I'm just watching.
There it goes.
I'm watching GameStop.
Handle.
Now 10 points off its high Oh my God, what a nightmare.
I mean, I couldn't even get out up there because they kept halting it.
No, people got completely bagged.
I mean, I scaled, but I didn't scale at the high.
It's a complete bag job. They just got hammered.
Especially the leap spreads were really wide.
GME coming down here.
Yeah, I was gonna take the Leaps Kim, but I saw the spreads on it, so I took the May 17th $32 calls. I took them just under $7, and luckily I just got right under $1,100 on the last halt up, right before it started to come back down. So I got very lucky for that scale and that fill there to exit.
Yeah, these are ones that I bought when Mikey had called them out. Like, I don't know.
Yeah, Paul. I figured some of the stuff out here. By the way, first of all, Mondays I know suck, and there's absolutely no pressure for you to be in these streams or do whatever if it's crazy busy work day. Please, please, please do not feel any pressure. GME still up on the day a little bit, but it's definitely pulled back from where it was. GME is now up 65%. 65% on the day, so that's an interesting one. But yeah, I'm slowly, every single day I'm learning one new thing on this trading view, and give me a couple weeks and we'll be at the point where there's some nice charts. But yeah, should be interesting. But yeah, Paul, I definitely do appreciate you being on these streams so consistently. You and Ollie and Frederick, and there's a bunch of others. Taco Lover's been on here a bunch. I just appreciate each and every single one of you guys, and just know there's absolutely no pressure from you guys. And if you want to come in here and hang out and use this as some background noise, I hope to facilitate. Putting the spaces back up.
Before everyone else is a loser.
Yeah. If you get to the point to where your position is up so high, you can take out your initial capital for the investment for the trade. I mean, that's when you should really start to think about, like, actually managing this position, like, appropriately for profits on pumps like this. Because then if you don't, and you just keep holding it over and over every other day, I mean, when shit like this happens, you're going to end up being the loser, and you're going to lose your money. Apparently, there's a lot of issues right now still with E-Trade, TD Ameritrade, TOS, and Schwab right now. So,
yeah,
I'm
and
seeing
so
the same thing.
just for the audience that might not be traders, like I only have one left, and I don't care whether that one goes to zero because I've taken out my profit and I've made money, and so this is just my runner. It's not that I don't care. It's just like I'm gonna let that one go however it goes.
I'm watching ARC-G right now. It's up 7%. It just hit their 50-day moving average, SMA, and it looks like it's about to resist. So I'm going to do some downside action potentially.
What ticker was that? ARC-G?
ARC-G, yeah.
Okay.
Order filled.
And my little stealth horse Wheat is still running.
Ooh. Yeah, I
love those commodities.
Yeah, I like that. I have big resistance as it approaches the $27 area right up here. So this could be a good spot.
Look at the $25 strike puts for June expiration. Heavy volume, lots of flow in that name right now.
June 21.
June 21, $25 strike puts.
Yeah.
For what game?
No, ARC-G. They're cheap too. They're $70 right here.
We got Andrew Tate dropping a lot of GameStop tweets today too.
So is it a coincidence that all these brokerage companies, they're having a lot of issues on the day where GameStop went over 100%?
Love it, Paul. Ooh, Debo chilling in the chat.
Or is there some other things going
Debo,
on?
I didn't know you were going to hear me talking. Debo has been killing it. He's going to be on my Predictisgram season team next season. Shout out.
It's about the volume. They can't handle it.
Yeah.
Second place right now. We'll catch up. Debo's the GOAT, though. One of my favorite things about Predictogram, honestly, is like so many more people that I know from who listen to the spaces every single day. I now like have more direct conversation with. I feel like my one of my big problems with spaces is not having the live chat. First of all, it makes it a little harder when you're talking, but also like it doesn't build up that community, like being able to see the people talk. Like Paul, Frederick, Ali in here every single day, like they're awesome and I know them and I get to connect with them so much more. And we really don't have that relationship in the spaces. It's pretty tough. So Predictogram has been something that's solved that for me a little bit. People like you and Bull Market Mellow, X2 Sean, Bree, Green Edge Dan, etc. Like so many people I've been able to connect with more, and I freaking love that. LFC Trader, etc. And it just spaces. I think that's one of their big problems. And a live chat would be a big solution. I'm gonna put this back out. Ooh, Debo, you've been killing it this season. Good job.
I don't know if earlier I missed the morning call. I had some stuff come up.
Damn, NVAX getting pulled along with GME.
Sorry, talking about this.
Ooh, Debo was just bringing up to me that NVAX is also moving with some of these meme names today. Novavax.
Ooh. And Myrna. Because that's one I'm in.
Ooh, a little pullback in Myrna, though. Still a nice move.
They're talking about it right now.
This is a longer term trade.
A swing.
All right. AMC retested the 9 EMA there. It has a clear right shoulder now for that inverse head and shoulders that Sharky called out, and it's getting that pop back up to the high. So.
Okay. I was going to say, with Walgreens Boots Alliance, I've never known what Boots actually was. It's the UK version of it, which makes more sense.
This is the highest volume on AMC since 7/24/2023, where the stock jumped from $4.30 to over $6 today. So far, it appears that it has volume so far I see is about 130 million, which is ridiculous.
Market breadth continues to be strong here. IWM's doing nice today.
It is. I really like IWM.
IWM 6-1 positive.
Will Design in my in the live chat room or whatever said E-Trade is down for more than an hour this morning. Started at 9:20 a.m. Eastern.
There's a lot of people pissed off about that right now.
E-Trade and Schwab?
He said E-Trade, so I don't know about others.
E-Trade.
Paper's having issues with TOS. Yeah.
Yeah, and TOS, all of them right now are all having issues.
Sorry.
I haven't tried trading in Schwab yet because I'm gonna give it like a few weeks for them to remove the glitches. I feel like there's gonna be some.
Yeah, I only have I have 2 accounts over there. My IRA is over there, but then I have a brokerage account, and the only thing I have connected to it is PeakBot, which will automatically, obviously, execute trades by itself. I don't really have to manage anything. That's the only thing I'm doing right now. Other than that, I'm just gonna let it run its course for a little bit until they figure out, kind of like what Will said, all these bugs and glitches. I'm sure they're gonna have things that need to get fixed and tweaked.
Wolf, I was talking with the live stream chat. I think one of the biggest things of Spaces not having a live chat that is such a detractor is we don't get to connect with the people who are in here every single day. It's tough to know who's in here all the time. And that's one of my favorite things about Predictogram is there's so many people that we just now talk with every single day. Debo, Mello, X2 Sean. I see a bunch of them down there. Shout out. I just think that the fact that we don't know who's in here every single day and so active and loving it really kind of sucks.
Yeah, that would be fun.
Shout out to, I guess 3 years ago at this point, me sitting in a apartment in Miami on a Zoom call with the Spaces team as they tell me that they're going to build out a Discord style chat for Spaces, getting me all excited, and then that never happened.
Yeah. Shout out Paul Ramos is in here every single day too. He's saying. Frederick, Ollie.
By the way, guys, going to trade for another 3 minutes here. If you want to get in anything else you were looking at, and then we do have Will Rind, and we're going to have a nice chat, and we'll probably talk with him about some of the craziness going on here today as well. But just keeping that flow open for another few minutes for anyone who wants to throw stuff out.
Mikey,
did you ever sitting at VWAP here?
Mikey, did you ever announce your second that secret ticker that you were going to say that was like the Carvana?
No, not on Twitter. I haven't. No, just in my Telegram group.
I did want to get that out there before we did sign off here, by the way. This has been a great morning of live trading, and I love getting to talk with these people every single day pretty much and hang out with them. So just make sure you're following the speakers up here. They're all fantastic. A lot of them are on those live trading spaces in Jordan's room that we're with every single day, and I'm sure they're gonna be over there hanging out at some point. They're all fantastic. And then we have a lot of other people like Shy, Kim, Craig, Josh, Stock Sniper, Will, etc., George too, who just come in on these type of spaces, and it's always so great. So just in general, I find spaces to be a great way to find new people to follow to improve your timeline. So check them out, especially when someone says something smart, something you enjoy, something you find informative. You should go in and follow them. And the real truth is, you can unfollow them later. It's actually really easy. But use this as a way to discover new people who know what they're talking about. Awesome. Jamie has been still pulling back a little bit.
Range low here at 521.10. You could basically say it needs to hold 521. Otherwise, it could go down to like 520.25.
What about Q's?
Q's right now, I'm looking at it, Sharky. If you go to on the 5 minute, it's a little, well, you can see it on the 3 and 5 minute, but there's a head and shoulders right now in QQQ.
Yeah, Q's outperforming a little bit. SPY looks like it wants to go green to red.
Yeah, SPY has the 200 EMA at 521.14. It held it this morning perfectly on the first drop, and that's where it's fighting it right now. So I think if SPY breaks and holds underneath the 200 EMA here on the 5, it should get that gap fill to the downside, which, where does that take SPY? Where's the gap?
If SPY breaks 520, I'm looking for 516.74 as SPY.
You know, one thing I want to mention about SPY, like in today's age versus how SPY was performing over the last couple of years, you know, when we're sitting in the 520s, if we see SPY up 1% for a day, that's a lot more than 1% on the day when SPY was sitting in the $300 range, you know. So I feel like we're going to see like slightly lower of the percent day changes, you know, because they would reflect into the value.
Yeah, that's an interesting
I 100%
thought.
agree. Yep.
Yeah, that's a cool way to that. I didn't think of it that way. It looks like SPY filled the gap, or is at least in it right now.
GME
AMC
bouncing right off of my EMA 113 like a boss.
Oh,
AMC.
AMC.
Thank you for sending me the signal.
A little bit of a news headline just out as well. U.S. New York Fed 1-year inflation expectations 3.3%. Previous was 3, so inflation expectations are continuing to go up. I will say they care more about the Michigan data than the New York Fed one, but that thought is still something to watch.
AMC, high Davis $4 calls are going to go on the money.
New all-time high.
AMC, our $6.50 calls are up 1,300%. Our $5 calls are up 800%. Our $10 calls are up 500. $20 calls 300. $15
Team
calls 100%.
is 6 of these. Is this too much? Maybe like I won't do this all the time, but just around earnings. How does this feel? How does this look? Is there just way too much going on? I hate that every single one is like doing stuff here when I go into one.
Pretty fun morning trading, obviously.
That one's close.
A lot of fun stuff going on here. Shout out to the crew for being on. What's up, Evan?
No, I was just keeping my thing on mute. I'm seeing that Roaring Kitty just might have put out another post or something.
AMC new high a day. Yeah, he put out the post right on that EMA 113. Coincidence?
All right. Let's actually, Will, if we can kind of kick into it with that. There's a lot of craziness going on in the market. What's your take on all this?
I have no idea why it's playing down here, but it is.
In a funny way, I wish I could, but the volatility is just so high that we just can't do that from a sustainability perspective. But now, especially, I mean, God, if it was like that before this morning, then it's definitely going to be the case after it.
Yeah, that seems to be the case. So, what is your take on all this? And I guess really a efficient market theory in whole, right? Where we can have $5-10 billion moves now just off of a tweet or something like that. No fundamentals change, nothing else along those lines. It's just simply a tweet can move things 5, 10, $20 billion.
Yeah, I mean, in a way, right, that the Fed has been the main sort of entity responsible for those kind of, tweets or those kind of actions whereby, you've got a central bank in place that, whatever they say, just in one official talk, makes a comment, moves the market.
2 out of 3 so far today, not
their
bad.
influence on it. But at the same time, you also have other people that can move the market. And
Let's try it.
in this case, this morning, we're seeing the meme stock, frenzy get activated again on the back. But yeah, I mean, it's I suppose in some
Meme
respects
stock
you could maybe argue it's
activation.
not too unusual if you think about the official, factors that move markets. But I guess what's more unusual, more interesting, perhaps, is the new sort of impact on, personalities, influencers, whatever you want to call them, on social media, that are non, market fed officials or anybody like that can have a big impact.
Yeah, it certainly seems like everybody can move stuff throughout. How does this affect, when you see things happening like this, how does it affect what you guys do? Or does it not have any effect?
In a way, it doesn't have any effect directly because, we obviously don't have meme stock.
I'm going to actually take a step back and explain what happened. So we have Will Rind from Granite Shares on here. They do a lot of leveraged single stock ETFs for traders. They have the NVDL with basically $2 billion AUM. They have this Gold Trust one, which is ticker BAR. It's the exact same thing as GLD, just with a lower expense ratio, 1.17. And so we're talking with Will about some different stuff here. If you are new into the live stream, make sure you subscribe to the channel, hit that bell button to get notifications whenever I go live. But yeah, that's kind of just level setting what we're talking about here.
That are also kind of interesting to people. So directly, not really, but indirectly, I think it just gets people enthused about trading, about the market, and then more activity, all things being equal, spread to not just these names but others around them.
Okay, so I have a follow-up question, but just to give context here for everyone that's with us, Will is the CEO and founder over at Granite Shares. Granite Shares is one of the largest ETF providers in the world. They have a bunch of double leveraged ones, which you'll hear often talked about in our spaces. I think NVDL is probably the biggest. That's double leveraged NVIDIA. That's one which we consistently have chatted about, almost $2 billion AUM. BAR is another one, which is not double leveraged. That's simply a gold trust. We've talked a lot about that, a little bit over $1 billion AUM. Just a cheaper way, basically, to get exposure to gold than something like GLD. And there's a bunch of others. I think CONL has been really popular lately. That's double leveraged Coinbase, right?
Yeah, exactly. CONL, another super popular one. I mean, those are the two biggest themes, I think, that you got AI and crypto. And so the two big stocks within AI and crypto over the last 15 months or so being Coinbase and NVIDIA. And so outside of NVIDIA, you have Tesla, which is TSLR, which is 2x Tesla. And then you have AMD, which is AMDL, and a bunch of others that give 2x exposure long and then also short on major stocks.
Would you see yourself ever creating something that has exposure to this type of stuff? For example, I don't know if you saw, but Van Eck did like a meme coin index, something along those lines, or that's not really water that you dabble in?
I think the challenge is always that because we only earn a management fee, so we don't participate in the trading volumes, there's no commissions or anything like that. It's just purely an asset play for us, and we make a small percentage on the amount of assets in the fund. It has to kind of have the potential to grow over time. So the challenge with a lot of the meme stock stuff is that your assumption therefore would have to be that that's going to be as relevant, in 5 years' time as it is today, which is a difficult call to make. And, some people have jumped into the space and done sort of meme stuff. People, done ETFs with Dave Portnoy, and I think that was also Van Eck, by the way, just coincidentally. But other people have done a meme basket, linked to Jim Cramer and stuff. None of them have really worked. So, again, I'm not saying that it could never happen, but so far it hasn't really panned out in the way I think people might have thought.
Yeah, there's been multiple examples of it. It is interesting to see, like, with so much hype, and a lot of them came out, like, in 2020 or whatever
Of
in the mix
course.
of it. Yeah, that Buzz ETF with the Fortnite one. I know Roundtail had their meme one too, so it is an interesting one.
Yeah, and then the Jim Cramer stuff, and there've been a few examples. Just none of them have really worked.
Will, I was kind of shocked with the short Jim Cramer one not really working out at well. Like, I remember when it first got announced and I posted the tweet, it was like top 10, top 15 most liked post I've had was the announcement of that ETF coming.
Yeah.
And it like never even got a chance. It was really weird that people want to talk about that one, but not necessarily willing to put their money behind it.
Exactly. I think people, I mean, myself included, right? Just, it was absolutely hilarious in many ways because of the fun you could have with it on social media, for example. And it got a lot of good play because it's easy to find him saying some of his most famous quotes about particular stocks, whether it was Bear Stearns or whatever, that was a buy up until it went under. But much more difficult, I think, to have a sort of trading strategy around it because, at the end of the day, the guy's a media personality, and he's paid to make those kind of calls, almost like every minute of every day. So it's really difficult then to try and, get the ones that you can, distill into any kind of short strategy. So I think it sort of ended up being great to talk about and like fun to laugh about, but it wasn't an investment strategy for people.
100%. I'm one of those people who actually, I don't know how much I believe in inverse Kramer. I just think, as you were saying there, he's a media personality who gives his opinion on everything, and we know investors, traders really can't do that because you're going to get a lot wrong. But I would tell you, I think you listen to Kramer over time, you're probably going to end up a little better off than if you would have never listened to him at all. And I kind of believe that. I know people might joke at me at that one, but whatever. I digress.
Yeah, I think there was a quote attributed to a guy called Porter Stansbury who wrote or who was responsible for a quite well-known investment newsletter called Stansbury Research. And ultimately, I think he said a quote something like, the American investor or the U.S. Public will forgive you for being wrong, but they'll never forgive you for being boring. Yeah. And I thought that was kind of interesting because in many ways, a Kramer and stuff clearly has got to be wrong like all the time, but it's entertainment. It's the reason why people tune in is because there's an entertainment value that is perhaps greater than the value of being right or wrong on a particular stock.
100%. I'm not going to lie to you. Your accent sparked a little question in my head. I'm a big soccer fan. I'm going to say football because I'm speaking in front of you, but just so we're all on the same page. I've been kind of surprised of like how little of an uptake a lot of like a Manchester United is public. We also have Dortmund and Juventus, etc. on some other exchanges. Have you ever looked into some of those kind of more sports-based names like thought to make anything around them? Because they definitely do have the name brand. I think, and they probably are going to be able to stay around. The problem is, is sports like the most stable and best business out there for a long-term stock? But I wonder if like a company like a Manchester United or some of those other ones like a Dortmund who's listed on an exchange that probably a lot of people who are trading on Robinhood can't see. If there's ever been thoughts around kind of those more sports names that are really popular that, I'm not going to sit here and say they've been great investments over the last 5 years, but yeah.
Yeah, it's a great question. So I'm a sort of, at least over the last 10 years, a long-suffering Man United fan.
Oof, pain.
So
at least you guys only lost 1-0 yesterday. Well. That's good against Arsenal.
Well, yeah. To some respect, that's maybe what it's come to if we're saying that was some kind of a positive. But I think the biggest question or the biggest issue you have, first of all, is not a lot of the stuff that is publicly traded. So the biggest issue you have is scarcity. And while you have Man United, there's public, and like I said, you got Dortmund and you've got a few others. It's a tiny number compared to like the sports universe. So NFL is probably a better example because you have something clearly that everybody's very familiar with, but it's just a private market, and therefore I think if you were able to release some of it publicly, it might have a lot of interest. But I think you've got to have more than just a few names to kind of make it really interesting to people. So that's always been, I should say also the UK. The UK had or has had different football clubs at different times make or be publicly traded. The other part that it's difficult to see sometimes is only like a small percentage of the float is actually publicly traded.
Mm-hmm.
And typically that means that it's not really that exciting for people because it's more like, for retail investors or for, small amounts people can buy, but you don't really get that sort of institutional size, and typically they haven't been, great investments. So all of that being said, I think it's like an evolution. There's no doubt that, the market now is very different. In other words, probably, maybe I may be exaggerating a little bit, but maybe like 20 years ago, people didn't really see football clubs and things as an investment per se. It was more just a sort of a vanity project that you were almost like guaranteed to lose money in. But if you were a billionaire or whatever, then you could do that. Now, clearly, that whole proposition has changed, and maybe the next leg of it all, or the evolution in it, is for it to be more kind of publicly traded, as the kind of global interest in a lot of these particular institutions and entities increases.
Yeah, if I could invest in the best team in the world, Liverpool, I would. I knew that would get you.
Yeah, trying to get me going.
I want to pull in a few others too. Maybe pull back to some of the ETF stuff going on here. Whale, you got any thoughts you want to throw into the mix? I know that we've talked about Drup and a few of these others. Drup almost back at all-time highs.
Big Paul. Hi.
Yeah, I was actually just looking at some of the charts before, and I was looking at Drup, but I also kind of wish I grabbed the AAPB, the Apple long a few weeks ago before it kind of climbed back up, but I missed that. But that would have done really, really nice. That's so like if you're constantly watching the charts and you don't want to use like high leverage things like an option, well, not high leverage, but high risk entities like an option, the 2x leveraged long on a stock that you see a nice setup is an awesome alternative, and I totally missed that one.
I would just
keep missing the moves. I think about it after the fact.
I would just like to point out there, Apple is my largest holding, and Will, I think you should never create a 2x short Apple. Thank you, bye.
I agree with that. Apple, I have to double check which is larger now, Microsoft or Apple, just because they keep teetering. But I think Microsoft is winning now. But Apple, for the longest time, was my largest holding.
Yeah, it's interesting because I must admit I was a little bit surprised myself at that, and have been really with Apple since we launched it, in that we don't see more interest in the 2x Apple and the AAPB, especially when this earnings that just came by. Obviously the stock could be beaten up quite a bit, and then normally that is typically a bit of a signal for people to buy in, especially if they're still bullish on the stock. But it's one of those names where maybe it's people just like to hold it long in terms of the actual stock itself, and don't tend to trade it that much. But I was surprised that we didn't see more kind of action in that.
Yeah, I mean, I know I've heard, maybe it's, I don't know if it's mainly because most of the time Apple's moves are kind of on the slower side. It's just gradual, but it's like consistent. So maybe, I don't know. I have to look at the performance of the actual ETF leverage to see how that moves, how that translates, because I know there's usually the it's meant to be like a daily thing. So I have to kind of look at what the chart looks like, but maybe that is why.
Yeah, it's obviously the number one holding in most of the major, if not all the major, certainly large cap indices. So from that perspective, you would think Apple would have a way bigger representation in our sort of platform than it does. But it may be one of the cases where it's not. Sometimes you guys will obviously ask me the kind of a good question, which is like, how do you come up with what ETF to launch? And sometimes they say, well, it's a combination of is the stock popular and the trading volume, etc. But maybe one of the cases where it's an example of a stock that's really popular, but yet for whatever reason doesn't translate, at least yet, maybe, into something that's like highly traded.
You know what? I might actually look into something here because Apple has their WWDC event coming up in 1 month from right now. It's actually June 10th, so a little bit less. And Apple has a very long, it's not only Apple, but Apple has a history of running up into events and selling off once we get there. And there's immense amount of hype around this event because people are thinking that a lot of AI news is going to be coming. So I personally actually might be taking a look here and see if I can get something going for the next month and exit out before the WWDC event. And yeah, it seems like a pretty interesting trade. I'm going to check it out. I'll get back to you. And as we're speaking right now, a story just came out from Bloomberg that Apple is preparing to sell its Vision Pro outside the U.S. for the first time.
Got a couple others on the panel. I'd love to hear any other thoughts people have on how they could use ETFs or these double leverage ETFs. They also make others outside of those too. Take a look through. For example, the other night, we do this weekly competition with stock picks, and someone wanted to go long Amazon, and I realized that you had released AMZZ, which is double leveraged Amazon, which is obviously having quite the go since the launch, Amazon being near all-time highs. So there is a lot of tools. Before I circle around, I might hit you, Ariel, and Josh, and a couple of others. Will, can I just get your thoughts on general market as a whole, how you're feeling right now? Because we're only about $5 off all-time highs, but the fear and greed index has receded a bit, and we're neutral right now, 52. So it seems like people are in the middle ground, even though we've had pretty good-sized rally here the last few weeks.
Yeah, I think to me, my strong sense is that a bit of the euphoria has kind of come out of the market.
Okay, Paul, so these single stock ETFs are really meant for traders, more short-term-ish. So what's happening here is every single day, these ETFs rebalance. Their stated goal is to get 2x of the daily return. And when you rebalance daily, there's like a slippage. I don't know the direct word for it, but if you hold for a year, you're not going to be getting 2x the return because it's meant to get the 2x of the daily move. So it's not, and if it were kind of made to get 2x of the return, it would be tough for someone else. Like if they didn't buy in the same exact day you did, then it would not be 2x. So that's kind of what's happening behind here. These are really meant for short-term, medium-term traders who maybe the play they want to get in is a little too illiquid. Maybe they just have a really great move and they don't want to necessarily go into options. So these are for traders, more short and swing and medium-ish term swing traders. But I'm going to ask Will that question directly.
This year, or whether it's two, or maybe even none. That market seems to be still in pretty good shape, and I think some of us were maybe looking for a little bit more in terms of the smaller caps with the IWM or whatever is starting to catch a bit, and it looks like that was starting to move in the last few days. Whether that can be sustained or not, is another question. But as we all know, look, the earnings have been good. I mean, it's another earnings session which has largely been positive, and so there's not really sort of too many things to get depressed about, other than if you're taking the other side of the inflation argument, I think.
Yeah, stock sniper.
Evan had his hand up first. I don't want to jump the gun there.
No, you're good. You can go.
Awesome. So, I just want to talk about these double leveraged ETFs. And, there's many situations for investing and for trading where this could be a better move than playing the actual company. Of course, the most famous one of all the Granite Shares ETFs, in my opinion, is that NVDL, which is a double leveraged NVIDIA one. And just like we know 4 quarters ago when we saw NVIDIA have a 25.4% move after earnings, which was absolutely ridiculous. If you held this throughout the last year, you would see 375.4% change in the year difference. And another situation where I think that this is a very good opportunity, to play these double leverage ETFs is especially in these crypto run-ups where we would have a series of a couple months where we would start to see buy-ups in crypto. Over that course, it's double leveraged and it's pretty much double the profit. Who can really hate that, And the Coin L, which is coins, the double leveraged one, you're seeing 359.4% year-to-date return, which is absolutely insane. That absolutely blows all these other companies out of the park, So mad props to Granite Shares and Will, what you guys are doing over there.
Thank you.
My question was actually kind of similar, and on the CONL, the 2x Coinbase leverage one, I think it's really cool that I've been looking at it, and it found a product that's more volatile than Bitcoin in the crypto space. So shout out to that. But my question is actually kind of similar to what he was talking about there. Like, who are these ETFs meant for? Like, how does the 2x leverage work? I know we've talked about it a little bit, but like, if I'm holding it for a year, should I expect to have the same 2x leverage as opposed to if I'm just holding it for one day? And kind of who when you guys are designing these, who do you have in mind? What type of user?
So they're really the design. That's probably the easy part. The design for active traders. And clearly, whenever everything or anything that has leverage moves around a lot, and so these are for people that are active in the market. You don't have to be a day trader per se, but someone who's like looking at their portfolio every day and able to or is actively making investment decisions. And when you talk about active traders, that can be anybody from a retail investor all the way up to the most sophisticated hedge funds and proprietary trading firms and things in the world. So we have a mix of everybody, and then there's sort of everybody in between them. And at the end of the day, that's the kind of beauty of an ETF, is that you can access it with a brokerage account. So it's really available to everybody, and so you get a huge spectrum of different people using it. And to your point about performance, that is really the key thing to bear in mind whenever you're looking at these kind of products, is that it's not a linear return. Meaning, if you were to buy any of our 2x products today and hold them for a year, then the return you're going to get is not 2x whatever the underlying stock is. So that would be an example of a linear return. This is a non-linear return, or is path dependent. And what it does is provide you 2x. That's the stated investment objective that we have over a given day, and then we rebalance at the end of the day. The reason we do that is so that we can constantly maintain the 2x leverage. So if you weren't to do that and you were to kind of let it run, then depending on performance of the stock, because there's no margin ability, you might be buying in sometime, let's say 5 days from now, and it would be either maybe more than 2x leverage or less than 2x leverage. So that's really just an important thing. And I think where it works really well is where there's a trending environment in the particular stock. So stock is trending up and clearly you're long, or stock's trending down and you're short. The reason why that works best is because that rebalancing creates a compounding effect. And so you're like compounding the profits from a given day and then leveraging 2x on top of the performance plus the profits, which gives you a higher return. And so that's just something to think about. And when you look at the moves in some of these products, as I can't remember if it was you, Evan, that said that when you talked about the Coinbase, when it went on a big run, if you looked at the return for these products, and even just with Apple, if you look at Apple from earnings, it's a great run. And sometimes that kind of compounding environment is just is really like the environment these products like. What they don't like is that really sort of frustrating market environment where the market is kind of, or at least in the stock in this case, is going up and down every day, up and down, up and down, up and down, and is directionless. It doesn't like that, because then you're kind of eating away at your rebalanced return every day, and so you're kind of losing money almost on both sides, and that's why there's like a bit of decay.
Appreciate it.
Evan, you have any follow-up on that?
Sorry, I was on mute. I was just saying I appreciate it. I always love to kind of get that conversation out there on these spaces. I think it's important.
Sweet.
No, absolutely. That's really, the product hopefully is very simple. In other words, it's 2x NVIDIA or it's 2x Apple. The wrinkle is just understanding exactly how that's delivered, and then the best environments or the right environments to hold the products. Unfortunately, I think for most people, they understand that and understand that over earnings season, or like you said, if sometimes you see people where the stock, if you're bullish on a video, for example, and you have a day where video might be down 5%, people look at the leverage products to get back into it, It's another thing that we see, or pre-market trades, all these kind of things that people are interested in.
One other thing that we've talked about a tiny bit is like how in after hours sometimes, especially after a company reports earnings, the option contracts are not going to be moving, but these 2x leverage single stock ETFs are. And I would imagine there's some increased volume in those after hours, given that a lot of those people trading around it can't use the options. So we had a bunch of them who reported like last couple weeks, and I want to go back and look at how everything moved there, but that is another interesting use case for these ones of trading in after hours following companies' earnings.
Yeah, and because they're global, you get more trading as well. When I say global, meaning that it's global appeal. So 2x Nvidia is just as interesting to investors in Japan as it is to you guys here in the US. So there are trading platforms now. The world is just much more interconnected than ever. So there are trading platforms that facilitate trading in US ETFs to, let's say, Asian investors. And so that means it's out of hours for the US market.
Ooh, he cut out. Cut out for me?
Yeah. That sort of liquidity in the product.
I think he back in, though.
Yeah, yep, I heard back. I heard the end.
You know, this might be a foolish question, and at the risk of sounding like a clown, I'm going to go ahead and ask it anyway, but it's a question for Will. But have you guys ever thought about having something even more leveraged, like maybe even 4x or 10x leverage compared towards these Nvidia and other ETFs?
It's not a foolish question at all. So we are really driven entirely by the regulatory environment.
Paul, guess how many watch hours we have so far?
The maximum amount of leverage that you can have on a
been live for 2 hours and 45 minutes.
Don't ask me why. It's 2x. And for those of you that are familiar with leveraged ETFs and note that there are some 3x levered ETFs out there, that's like a legacy of a previous regulatory regime. But now anybody launching a new product you're capped at 2x. So that's the issue. Outside of the US, it's possible to do more leverage or to have more leverage, but then it's more difficult to access those kind of products. So yeah, it's 2x, and that's why we have 2x for the most part.
Hey, Will, I have a question. What is the difference between an ETF and an ETN or an ETP or that type of thing? How are they different, and kind of maybe what are some of the advantages to ETFs versus the other ones?
Sure. So an ETF, first and foremost, the acronym stands for Exchange Traded Fund, and that's important because the fund is the important part. So where you have a fund, it's almost always a 40 Act fund, which is the most highly regulated investment vehicle you have in the US. And that means that the fund has title over a certain pool of assets. And obviously the regulatory protections have been registered here, regulated by the SEC, etc. An ETN stands for Exchange Traded Note. And again, a note is not a fund, but it's another way of saying a debt security. And it's a debt security that is issued by a bank. It can only be issued by a bank that is listed on the exchange and is traded on exchange. So from an optical perspective, it looks and feels like an ETF.
Paul, no.
It's not a fund, and it doesn't have the same
37.
regulatory protections as a fund. And most importantly, what it means is that you are a unsecured creditor of the bank that's issuing it. So in the case of, for example, famously Lehman Brothers had some ETNs in the market. And so when Lehman Brothers went bust, the investors in those ETNs lost all their money not because of the underlying investment, because Lehman itself went bankrupt. And the investor is or has the credit risk by holding those products to the bank. So that's the main sort of important distinction, is that one is a debt security and you have credit risk with a bank that's issuing it, and the other one is a fund where you don't have credit risk against, like, for example, any of our Granite Shares products. There's no credit risk against Granite Shares. You're owning shares of a fund, and that fund is segregated assets that have a trustee, that have a custodian, etc., and all regulatory protection. So ETF is a better structure, but there are some things that you can do with an ETN you can't do with an ETF. And then, obviously banks are able to issue ETNs. It's a form of financing to the bank, and sometimes that's attractive for them to do.
Appreciate that.
Let's get some of the other voices that we haven't heard from into the mix here. Shah, you got some thoughts?
Yeah, Will. So I know the market's fading a bit past 10 minutes as we speak, but some China news came out on NVIDIA suggesting that local buyers shouldn't be buying their chips. But I feel like the market kind of shook that off.
This is really random.
This is following the obvious EV tariff that U.S. made on China for the 100%. I think it was the rates they're going to charge on the tariff. Do you see this kind of becoming more of a headwind noise in the market going forward, where it's going to be a bunch of back and forth? That's part A question. Part B is, why do you think the market just shook off that China and NVIDIA news? Is it more just noise and just more of a bark than bites, and they're just kind of calling them out on the bluffing? Or what's your take on
it? I think that it's probably, just in terms of the shaking off part, I would imagine that it's probably similar to what we saw at the end of last year, where the Export Control Act was one reason that NVIDIA cited as having lower sales from China. And the stock obviously sold off as a result of that. But then almost as soon as that had been announced, they made another announcement saying that they had sort of found a way to still, supply chips to China without, flouting any of the export restrictions. So there was a big rally kind of on the back of it. So I think maybe this time around it might be similar to other China news that we've heard, and I think it's going to be ongoing, to be honest with you, this kind of tit for tat, tariffs and spats on commercial products, whether it's Apple products or whether it's, in this case, it's NVIDIA or others. So probably noise until it shows up as, not noise in an earnings call.
Appreciate that. That's helpful. Next question I have for you. This is definitely on top of my radar just because the bubble in 2021 was absolutely severe as a growth investor. And I think Evan was the one who called out, we're really close to all-time highs, but the sentiment is near neutral. It's not as bowled up as you would assume to be. And after seeing a round 2 of the gamma squeezes on these meme stocks today, that was the previous precursor of the bubble bursting and the severe correction following 1 to 2 years. Do you think that's kind of on investors' radar right now? And wow, this is happening all over again. We're near all-time highs. I think a sell-off's going to happen. That's going to start becoming the narrative potentially on why everyone's neutral. Or what's your take on this kind of bubble forming within meme stocks again? And will this be another round 2 of a stock market fade due to frothiness? Or is it just, again, you can't base today's behavior on something that happened 3 years ago?
My sense is that let's leave the meme stocks aside for a second. I'll come back to that in a minute. So if you look at the market, it's fundamentally different from where we were in the high or at the end of 2021. So the interest rate environment has dramatically repriced the market and really sort of cleaned out the companies that were, maybe exhibiting amazing returns in 2021. Maybe they did have really fast growth or fast growing revenue, but these are companies that were trying to pursue strategies like market share at all costs that weren't profitable, maybe didn't have a road to profitability in a market where money was priced correctly. And so as we know, all of those stocks got completely slammed. So this is a market where, the quality stocks are the ones that are leading charge. So at the top of the heap, the NVIDIAs, the Microsofts, the Amazons, the companies that if they did, in the case of Amazon and Meta, and then go through a radical repricing in 2022. They've cleaned house, become a lot more efficient. These were companies that were already, generating huge amounts of money.
Appreciate you sending that in, Frederick.
Focus on costs has made them, even stronger proposition now. So the fact that the meme stocks have come back, at least obviously we're talking about this morning, to me, the environment is just different. And so whether it makes a sustainable comeback, in terms of the meme investing, whether that becomes a thing like it did last time, again, yet to be seen. But I do think the market is just completely different to where we were. At 5% interest rates, it just has to be. And, really the stocks that have been affected in a way, and, again, it's two sides of the same coin that, shows the size of the market has strength and that we're moving into a more sustainable picture of the smaller stocks that are carrying typically more debt and are less profitable, balance sheets, not as strong clear as the larger companies. So I do think we're a different place now. It doesn't worry me that the market is at or near all-time highs, given the environment and given the earnings that have been produced. I think, again, if for the market to sell off in a dramatic way, I'm not sure that, certainly I don't hear anybody, really talking about a bubble. Certainly the larger technology companies or large stocks in the market in any way similar to what I've heard in the past, when typically people start talking about bubbles. Gold's at an all-time high. In almost every other cycle, you hear the media screaming that gold would be in a bubble. This time, nothing. So I think we're just in a different environment, and people kind of understand that.
Perfect. Appreciate that. One last question. Volume has been really anemic this month, so far the month of May in the markets, today included. Only I think the SPY's maybe 12 million shares traded.
Yeah, I missed this Squarespace.
What's your take on why that is? I know this is seasonality weakness in May, sell in May, go away type thing. Is it more of that where just seasonality is just usually on a lighter side, or is everyone just waiting for the CPI report this week and there wasn't really much catalyst in the month of May until end of this week?
Yeah, I think it's that. To me, almost like a lot of the seasonality kind of has gone away over the last few years. It feels to me like almost every month is as busy as the last month. So I think it's less about that. It's more about just the sentiment broadly. I think that, after the Fed sort of came out saying that maybe the outlook for interest rates was revised, the inflation was a bit stickier than they thought. May wasn't a great month, and I think you're seeing that in your kind of neutrality, statistics that you've been quoting, and that while everybody I think feels constructive about the market, at the same time, there's some of that euphoria that maybe existed at the end of April has kind of come out a little bit.
Really good question.
By the way, actually, really quickly, on the China one, you guys do have the 2x long Alibaba ETF, BABX. I just want to make sure we got that in there when you guys were talking about it.
Yeah, another good example of, I think, a stock that, clearly the whole Chinese market has been going through, almost a depression relative to what's happened here. But, I think part of the reason why you see gold at all-time high is because, Chinese real estate is still such a huge problem that you've got Chinese retail investors buying gold instead of buying real estate. And, until we see a bit more of a signal that the Chinese economy is going to turn the corner, you've got companies like Baba that are sort of suffering along with everybody else, despite obviously the recent rally the last few days.
Let's check it out. If Ariel, is there anything on your mind that you want to throw into the conversation?
Yeah, I'm here, brother. For me recently, it's just been focusing a bit on earnings winners and obviously some group rotation. In mid-February, we started to see energies, and then, obviously we talked about gold having broken out of that big monthly base. Recently, I do subscribe to, focusing on the commitment of traders data. And recently, we talked about a few weeks ago about silver and that being a bit of a crowded trade. And, it did do well last week, but and obviously everybody was focused on PAAS last week, and that was an awesome move. But for the most part, the silver miners really haven't done much. And then even with Alcoa this morning, it was a great move, and it's holding up incredibly well. FCX, SCCO, so copper and aluminum are should I say kind of shining today, with the exception of gold and silver not really doing too much. And I believe that that's just because it's somewhat of a crowded trade. People are looking in other places in the metals space, but I always continue to focus on group strength. Copper is one of the leading groups. It's actually the second leading group in the market. Aluminum's right there. Super boring group in waste management. I'm sure everybody's been paying attention to utilities recently, VST and NRG, CEG. So, there are places in the market. Even obviously we talked about China as well a few weeks ago, and you've got PDD and BABA and TME, and there are places to look in the market instead of, maybe some names that are still extended in the tech space or that they're just still base building. I don't really want to participate in sectors that are base building. I think that's, one of the easiest ways to kind of drain your mental capital. And again, even shippers, I don't know if anybody has been talking about Zim. I don't necessarily love Zim because it's such a beaten down name, but boy, that name has been ridiculously strong. And then obviously next to those shippers, you've got STNG, which is one that I bought last week on Tuesday, if I'm not mistaken, Wednesday, excuse me. And you've got DAC, SBLK, INSW. So the sector is chock full of names that are working well. And I think that that's kind of what I want to have my focus on is sectors. And even one that I heard Kim mention a few weeks ago, and I was absolutely in agreement with. It was the food stocks. You had Chipotle on earnings off to new all-time highs. You had Wing holding up really well after earnings. Obviously, the Sweet Green gap up. Kava's been a very strong name. So just focusing on leading sectors, anything within the top 40, because there is 190 plus industry groups. So things in the top 40, silver does fall in that space, but again, it's a fairly crowded trade, at least from a positioning standpoint.
Have you ever touched any of those double leverage ETFs or played around?
Yeah, I actually have traded. I have traded the coin leveraged, and it's really great to actually have somebody in here who's created those products. I think that's amazing. Obviously I had traded it well before I knew who Will was. So they're great products. I should also have traded NVDL. I bought NVIDIA way back in January on the $500 breakout. And boy, it would have been nice to own NVIDIA. That's for sure. With the amount of money that I put in there, I would have done a whole lot better. Owning the leverage play, and particularly because he was saying, these things are great when markets are trending. And boy, did NVDL and even like an SMCI, did they ever trend? That was probably one of the nicest and cleanest and easiest base breakouts I think that anybody could ever hold. The stock did absolutely nothing wrong in 2023. It makes a huge move up from the 200s and then proceeds to go sideways for 5 months. It's the 5-month period which you have to be very diligent to avoid. But when it breaks out and it gets nice and tight, and I use just some simple moving averages, but once those catch up to price and you're not extended from a 50-day moving average, these base breakouts can go for a while, right? And it obviously, like an SMCI had a multi-month base, and you can compare them to like a base like AMR. I'm sure everybody knows AMR. This is a name that went from the teens to 180 and then proceeded to go sideways for a year plus. And then, when it breaks out, it doubles and then some. And again, obviously you have smaller bases, like we were just talking about Alcoa, and this is really how stocks move. So you just kind of have to avoid the basing period. But when it breaks out, man, those leveraged ETFs are and not just ETFs, right, but leveraged individual names can be great because obviously, you're capturing a bigger percent move, and they're a bit cheaper, right? You're not owning a name that's $500. It's quite a bit cheaper. So, you can get more more skin in the game, especially when it broke out. If I'm not mistaken, it was like $17 or something like that. So it's pretty great. And I don't know percent wise. What did this thing go? Maybe 300%, maybe a little bit less, 200%. Yeah, 200% move from breakout to the top. I mean, that's incredible. But I think, here, I think it's just good to wait for CPI and PPI and see kind of how the market reacts to that. But in the meantime, there's plenty of sectors to trade. Energy names, even though crude's been coming down, some of them have still been acting well. Stocks like FANG, WFRD, TDW, even XOM, some of them are just deadly slow. So, yeah, I know they kind of suck to own. I know some of the option trader guys in here, they might not hate it as much because you can leverage up a little bit on options. But, considering I trade shares, they are slow. But there are sectors to own that maybe aren't like the sexy, right? Again, going back to Alcoa, there's probably not a lot of people that wake up and say, well, if Alcoa breaks Friday's high, I'm excited to buy AA. I don't know that many people say that at all, or a CENX, or, they're slow, or even like for gold, not many people want to buy NEM. And I get it. Right. But at the same time, I think if you just focus on things that are coming out of clean bases and are in top 40 groups, that's probably the very best bet. And, avoid basing periods, avoid stocks that are overextended and groups that are overextended. And, and I have an opinion on these the meme stocks as well. Sometimes, when the meme stocks are running, everybody gets kind of so enamored with what's going on with the meme stocks. But, people are kind of losing sight of, maybe some of the selling off that is occurring, in a name like even though Tesla popped up this morning, some of the daily pressure that Tesla's been seeing, or the big morning sell-off, that Microsoft saw or Meta saw, Amazon's still hanging out low of days, Google's red on the day. So, the market kind of sells off some of the leaders, and obviously that adds pressure to the market. And then, on the flip side, they're kind of giving everybody something to talk about with GameStop.
They're definitely playing both sides. I would agree with you there. Will, you got some thoughts on all that?
Yeah, no, it's just very interesting times. I think we'll see obviously what happens here and whether it can be sustained in terms of on the meme stock stuff. But look, I think again, when it comes to some of these large cap names, there may be some spillover to it, but big focus now obviously on the Nvidia earnings that are coming up. I think there's a super amount of people dialed into that.
Chat, I'm going to be back in a second. I have to let my dog out.
Obviously the last few earnings calls, but every time the stock goes higher, clearly there's more sort of focus and more interest in the earnings. So looking forward to that, to see what they're going to say. And I think overall, generally, feeling pretty good about where we're at. Obviously, just need the jobs report, particularly any kind of inflation numbers, to maybe come in a little bit lower. And I think we have some good support here.
Yeah, and Will, to that, I'll add, you can have a hotter CPI, but then, even last month when we had a cooler PPI, that can be interpreted as, okay, well, the normal consumer might be paying a little bit more, but the margins with PPI are getting better for these businesses because the things that they sell us are actually getting cheaper, which, you know, increases businesses' margins, which, you know, really the people who move stocks, institutions, are sitting there saying to themselves, well, you know, the consumer might be paying more, but the margins for these businesses are also getting better. So I remember last month, you know, you had a hot CPI, but then you had a cooler PPI, and I kind of laugh, right? Okay, so no problem. I'll pay more for my stuff so long as my businesses are making better money. You know, that's I get a good chuckle out of that, but really it could be something similar. And obviously I personally believe, just watching even the price of crude come down over the last few weeks, that is obviously something that will help most people, you know, with CPI. You know, it's harder to get inflation up if crude oil is coming down. I don't want to see it come down too much, because some people might say, well, then that's you know, it's recessionary. You know, we're going into a recession. Crude's at $60, $50, whatever. That would be a little scary. But if crude kind of stays where it's at, goes a little bit lower, I think that can be viewed as a big positive, because so long as crude's a bit cheaper, you know, your groceries get delivered a bit cheaper, your clothing comes in a little bit cheaper, everything, the whole world moves for less money. And I think that is definitely a positive.
Yeah, and I think the news again coming out of China is also kind of positive. Like the one positive effect of, seems like they are pivoting the economy to focus again on exporting, and you know, with their currency deliberately obviously in the tank, you know, they're effectively exporting deflation, which obviously benefits the American consumer massively when you're buying stuff at Walmart.
Right.
So, you know, that's again an argument to say that, you know, margins, things can
If
be
you guys can hear the
retained,
dog, she is in the room with me now.
while we continue to import you know, deflation from China.
Cute.
Another one that was kind of interesting was I was actually at, I don't know if anyone's familiar with, there's a conference sort of organizer called the Money Show. And I was at one of their events last week and ended up talking to some guys who were in the real estate business, and they're you know, developing single family homes down in Texas, which you just thought, you know, was, or it certainly has been, you know, one of the hottest markets, you know, in the country. And what was interesting was they were saying that it's really starting to dry up in terms of the demand. And, you know, really now the sort of the financing environment is where the rubbers kind of met the road, that people typically, you know, were able to finance projects or got into the financing just about the right timing, you know, when we started to raise interest rates. And so now, you know, so 2+ years into that, the financing environment has really changed. And so one thing that was interesting was saying that the construction guys, in other words, the contractors, sort of calling around saying, hey, do you have any work for us? You know, do you have any work for us? And really, that has been a big problem, because most of you know that, you know, the cost of materials from, you know, since COVID basically have gone through the roof. And obviously the cost of construction it's gone through the roof as well, because labor has been so much in demand that pushed up. So I think that now, you know, obviously contributes into the shelter part, which has been still one of the major, or probably the major number in the Fed inflation calculations that has remained elevated. And so I think if we start to see that coming down, so in the next 6 months, especially, saying that demand is going to drop off, again, it plays into this environment, or into the broader narrative that inflation is coming down, and these effects that we see from 5% interest rate environment are starting to bite.
And that's interesting you say that, because obviously one of the leading sectors last year was home builders, and even heavy construction and engineering names have been absolutely awesome. You know, names like FIX or even, again, the home builders, TOL, PHM, you know, they've been absolutely awesome names. So it will be interesting to see. And obviously they're very interest rate sensitive. You know, you push interest rates up, it finally starts to trickle into the economy, and not many people are buying homes at, you know, 7% or higher.
Real quick, just because we only have about 2-3 minutes left. Kim, did you want to get any comments in here before the top of the hour?
I'm here, sorry. No, I'm just listening. I appreciate all the conversation, and yeah, just listening right now. You're good.
Okay, perfect. Then Will, I'll kind of turn it back over to you here for these last couple minutes. Any other messages?
Thank you, Will, for all the information you give about the ETF.
Yeah, seriously.
You're welcome.
Yeah, Will.
And I have been trading them. So
how do you see these fitting into people's portfolios? And for those that want to go and do some due diligence, where do you recommend they do that, Will?
So I think, again, we obviously monopolized the conversation a lot talking about the leveraged single stocks. And so I think, for those products, are clearly for active investors, people that, monitoring the portfolio on a daily basis. And, there's loads of ways to implement that. I think stepping away from leveraged single stocks for a second, we have obviously other ETFs that are not leveraged. And, those are anything from, as you've talked about, Gav, the gold trust or bar, which is just giving exposure to gold. We have a broad commodity fund that provides exposure to the broad commodity market, almost like a SPY of commodities. That's COMB. And then really the two kind of interesting ones, in my mind, one on the income side, which is HIPS, which generates about 10% per annum in terms of income. And then DRUP, which is the disruptive equity one. The HIPS one's kind of interesting. I'll just mention it briefly because we've been talking about the narrative in the market that interest rates are going to be on their way down at some point this year. So something like HIPS is interesting because for anybody looking for income, what's interesting is you lock in the income rate when you buy it because it's a fixed cash distribution. So what we've been kind of saying to a lot of advisors and people we talk to is if you think that interest rates are coming down and you may be sitting on a 5% money market fund or whatever it may be, and you think that by the end of that year that interest rate or the amount of income you're generating might be not 5%, but it might be 3%. There's something like HIPS is an interesting proposition because if you lock into that 10%, whatever today, in 12 months' time, if the interest rate environment is a lot lower, you're still making 10%, whereas everybody else who's got more floating products is obviously on a lot lower amount of income. So HIPS is something interesting to think about. And then, like we talked about in this space a few times before, the DRUP, disruptive equity, which is a NASDAQ partner product that we have, provides exposure to the top 50 disruptive equities in the US.
Perfect. Well, Will, always a pleasure having you on. Thanks so much for coming and sharing with us.
Yeah, always a pleasure. Thank you so much. And exciting day, obviously, being a Monday morning with everything happening. So let's see how it all plays out.
Perfect. We're looking forward to it. Thank you. And Evan, I'll turn it back over to you.
Yeah, I always love these conversations with Will. I hope we get to have a couple more of them. So, this was a fantastic Spaces. Make sure you're following Will and the other speakers up here. They were all amazing. And, that's going to be it for this morning Spaces. I know Jordan is still live. You can go and hang out in his link if you want. I know Roaring Kitty is still tweeting and stuff. And I have a couple more questions around all the stuff we talked about today saved up for that next time we talk. So, looking forward to it. Awesome. Appreciate you all. Hope you guys have a good day, good morning. Hope the market moves whatever way you are positioned for it to. And I appreciate everyone.
Thanks, Evan. Have a good one, brother.
Appreciate you guys. Appreciate you, Will. Awesome.
Thank you.
And now we wait like 5-10 seconds so everyone catches up. And goodbye. All right. That was the Spaces closing out. I'm actually probably not going to be joining into another room. I'm probably going to be shutting down this live stream within the next couple of minutes. For any of you guys who don't know, I'm going to the Rangers game tonight. Let's go Rangers, watch some hockey. So I'm trying to get into the city a little earlier in the day as my dog's about to jump off her bed. So I appreciate each and every single one of you for hanging out with me this morning. If you're not already subscribe to the channel as my dog's complaining, and hit that bell button. I'm going to be live tomorrow morning, probably 9:15 a.m. Eastern would be my guess, maybe 9:20. And I'm going to be live all day tomorrow. So tomorrow should be a nice 9 a.m. to 4 or 5 p.m. Stream on here. And I would imagine Wednesday and Thursday will be similar. So this is probably the one day I'm taking off a little bit earlier. I know we have that OpenAI event, which starts in an hour, which you should keep an eye on. Not many earnings coming up after the close. So just keep all that stuff on your radar. I hope you can't hear this dog in the background that's starting to cry. I appreciate each and every single one of you for hanging out with me today. The average watch time on this was 18 minutes. And one thing that really excites me about these live streams is the first kind of day I was going live, I was really struggling to get even like 1 or 2 viewers. I'm going to get my dog for a second. 1 second. And now she's sitting on my lap, so let's see if this helps. But yeah, when I first started this, like we were getting like 5 viewers, 2 viewers, 3 viewers concurrent. And then week 2, it was like 5 to 10. And then week 3, it's like up to 5 to like 10 to 15. And we were going live this morning, and like within the first 10, 15 minutes, we were up to like 20 people. So building something small here from the start, from the ground. And I know this is going to turn into something huge. And it's really just really awesome to see the kind of you guys enjoying this clearly by you hanging out in here for so long. And I just appreciate each and every single one of you for allowing me to do something I genuinely enjoy and do this for a job and do this every single day. So I'm building. Expect a lot more coming from this channel, from these live streams. I appreciate each and every single one of you. And yeah, I will catch you all on these YouTube live streams tomorrow morning. My guess is like, oh my God. All right, that was a rough jump down from the dog. I appreciate all of you. I'm going to end the spaces. I love you. Bye.